in 1 second, and we will confirm that we're up and running here live. Excellent. Al, I did not take your comment too seriously. By the way, let's officially hit our start time here and go for it. Again, always curious where everybody's joining us from, so feel free to chat in. There's quite a number of people on today, so by all means. By the way, somebody always asks me this question, so a few informalities I try to get out of the way right up front here. So hello, I finally turned on the camera here. Again, everybody's kind of chatting in where you guys are joining us from today. So welcome to my, it's an office / used to be a gym. I am here in the U.S. Virgin Islands. Specifically, I'm in St. Croix, just on the north side of the island, about 100 yards off the water here. It is not a bad view just beyond the camera over here. Sorry, I was walking to be able to see. But nevertheless, I'm going to be trapped inside for the next, hour and a half with you guys. It is good. So it looks like everybody hears us all right, sees us all right. Again, everybody always asks if this is live. It is live. In fact, we'll even do a couple of live trades that we're going to be firing off today. So I like to get those informalities out of the way, right up front. Again, S&Ps are heading a little higher today. It's still early in the day, but we'll see. So we'll get officially started here. One of the things that I want everyone to be aware of is that no matter where you're joining us from or how you're joining us today, we are watching the chat live. So I am more than capable of answering some of your questions, and will answer all of your questions during the course of today's session. So by all means, like these are not, your questions are not going unread. I see everything going through here. By the way, there's two different places you can actually chat in a chat box, or you can go into the question and answer box, whichever works for you. We've also got a couple of individuals helping support us. Brian is on today. Jeff is on today to help support us, answer a couple of questions. Anything I don't get to, nevertheless, though, I will answer questions throughout the course of today's entire session. A few other informalities. If you see me kind of randomly looking around, I use a 6 monitor system. Honestly, I don't use that many monitors to trade. I typically use like 3 different monitors to trade. And then it takes like 3 monitors to run this broadcast to actually, watch your chat. So I'm always looking around over here. Anyway, that's pretty much it for some of the informalities, and I'm going to get right to it over here. So with that, let's get started. So specifically today, you're joining us. We're going to be talking a little bit about Ultima Trades, and Ultima Trades is 2021's high probability income generator. Again, my name is Don Kaufman. You're watching a TheoTrade presentation. A risk disclosure: we're not financial advisors nor a broker dealer. For those of you that have been around, and maybe you've traded for a couple of years, maybe you've traded for more than a couple of years, or maybe you're brand new to the marketplace. I have been involved in markets for a very long time. I was involved in Thinkorswim, a startup brokerage firm, all the way back in 2000, 2001. Worked there for about 15 years. I'll tell you a little background on me, but that's why I always throw up the risk disclosure. I am no longer in the brokerage business. All right, this is why you're here today. Let's get right down to business. So every time that I've actually talked about Ultima Trades, or what we're going to discuss today, these presentations are very different. I change up a lot of the presentation from time to time. So if you have been here before, trust that you're going to learn a substantial amount beyond what I've possibly covered in the past. So again, why you're here today, we're going to talk a tremendous amount about Ultima Trades, what that kind of means, and how they're ideal for the current market environment. And I want to reiterate, again, I know a lot of people are coming here, I don't even know what an Ultima Trade is. We're going to explain that. And it's about generation of monthly income, which I'm going to talk about incessantly. We're going to learn some specific symbols. In fact, we're going to talk about this just in about the next 5 minutes, that professionals use on a daily basis to be able to create Ultima Trades. You're going to learn how and where edge lies and how you can take advantage of it as a retail trader. By the way, the word retail trader, you and I are retail traders. I mean, I trade from my home. I'm no longer in the market making business. I'm no longer in the brokerage business. I'm a retail trader. I've been on the retail side of this business. Well, I've traded retail since about 2001, but I've been out of the brokerage world since roughly 2015 now. So I'm 6 years outside of the brokerage world. We're also going to learn to reap the benefits of high probability trades while learning little known secrets to not taking large losses. So we're going to talk about very high probability trades. And of course, specifically what products make viable candidates. And I'm actually going to show you many specific trades. We're going to go through trade after trade after trade, give you a feel for what I've done. We're also going to talk about what products make a recipe for disaster. So again, those are some fairly important concepts that I just wanted to give you guys like a heads up before, we get too deep into this, right? So this is where we're headed today. Next on the docket here, free auto expected move indicator. There's an indicator that I reference pretty consistently, whether it's here today, and I will talk about this particular indicator today. I also use this particular indicator on any video that I may do, and it's the auto expected move, and it's a very, what we'll term quantitative tool, okay, a very quantitative tool. It's also one of the most single advanced indicators ever coded. So I'll explain a little bit about what it does here momentarily. This auto expected move indicator is our free gift to you. Stay with me right until the end of today's webcast, and we will provide a specific link and you'll be able to go grab that indicator for yourself. The indicator looks like this. Okay, this is where I always say, like, I hate using PowerPoint. I do this during the trading session so we can talk about markets because they're open. I had a screenshot a second ago of Tesla. But with Tesla, okay, I'm going to go ahead and apply auto expected moves. What you're actually seeing here in terms of the auto expected moves, because a lot of people have no idea, well, what does that mean? Okay, what you're looking at in the auto expected moves, I'm just going to show you. See how there's 3 lines? Okay, that's how the options marketplace kind of depicts risk. The options marketplace, and you can see like literally there's 3 lines this week. This is where the week started. This is the upper edge and the lower edge. And what this basically means is this is what the option market, okay, handicaps us to move. And the option market, like in Tesla, for example, has billions of dollars being traded in it. So this is not like a MACD, a Fibonacci. It's not like, it's a true forward-looking indicator based on a definitive market. It's not like looking at a MACD, which is also off of stock data. This is the option market depicting risk moving forward. And what's crazy about something like Tesla had 1, 2, 3, 4, 5 consecutive weeks of smashing through what we term expected move, which is a statistical anomaly to say the least. But the cool thing is about it, you could have picked up on this after the first 2 smashes. The first 2 times it smashed expected move is already a statistical anomaly. By the third one, you would have picked up on this. It's one of the many uses for this particular tool. Anyway, I want to reiterate once again, this is our free gift to you. It's a $500 value. Stay with me right to the end of the webcast and we'll give you the auto expected move. We do this simply because it's only fair. Like I talk about it constantly and we want everybody to have it. Next in the docket, a couple of housekeeping items. Listen, this is a skill set. I'm going to cover a lot today. Shut the door, turn off Skype, chat, close Facebook, get rid of Facebook, phones on silent mode, kick out the kids, definitely kick out the kids. The dog can stay. All I'm simply saying is, right, you took the time to be here. I'm going to throw a lot at you. In fact, I'm going to throw a lot at you almost right up front here. Focus on being here. I think it's important. And I think I'm going to tell you right now, I keep adding slides to this. So I'm probably going to be at least an hour and a half and hope that's okay with everybody. You won't get bored. I promise. I'll keep you entertained a little bit here along the way. So here's a bit about me. So there's some people that are brand new. Anybody here brand new? Have no idea what a TheoTrade or a Don Kaufman happens to be. As I say that, I'm going to grab a little bit more caffeine. First, you should know a little bit about me. I like lots of caffeine. No, it's actually so here in the Virgin Islands, we're not on Eastern time. We're actually in the Atlantic Standard Time. So it's already 2 o'clock in the afternoon here. It's an afternoon caffeine beverage. We're out in the middle of the Atlantic in our own time zone. All right, a little bit about me. I watched order flow for 15 years, and that is in large part what kind of brings me here. Very unique skill set. So people, first of all, they always ask me how I learned about this business. And I'm always surprised. There's a lot of educators that are in stock market and so forth. And I always ask them and they're like, well, I did this and I drove a cab for a couple of years. Next thing I know, I'm trading options. I'm a very different background. I actually grew up around traders. I had an uncle that was a market maker back in the 1970s. He started a trading firm. If you're from the Chicago area, you'll probably know the firm. It's called O'Connor and Associates. He built the firm from one seat in 1976. He owned over 500 seats by the early 80s. They sold the firm, O'Connor and Associates, to the Swiss bank in 1992. It was a multi-billion-dollar deal at that point. And I just grew up around it. I was always around it, at the Thanksgiving, table. I'm just thinking about Thanksgiving already. The Thanksgiving table, I remember, you talking about, most people are talking about what they did over the course of the year. Our family would be talking about, I was like so in the money on that particular trade. It's different environment to grow up in. So right out of college, literally 3 weeks out of college, I went to work in Chicago. And I then got I had some buddies that I kind of knew from the trading floor. They're about 15 years older than me. They said, we're starting a brokerage firm. We're leaving the floor. We'd love you to join us. And that firm was actually called Thinkorswim. I think a lot of people probably know the firm and the name Thinkorswim. I was there very, very early on. I was on the executive team when we took the company public in 2007. I was there when we were acquired by TD Ameritrade in 2009. And I went on actually to run the entire education division of TD Ameritrade and their 7 million clients from roughly 2010 to 2015. Everybody always asks me also why I left TD Ameritrade and Thinkorswim. The answer is quite simple. In 2010, they signed me into a 5-year lockup clause. On the 5th year and 1 day, I exited, and it was a great exit. So, but in that time, I actually built the education division of Thinkorswim, ran the education division of TD Ameritrade, but more importantly, I got to see what everybody else was doing. And that is, you have 7 million clients, and we'd actually use big data to actually study what everybody traded. So the bottom line is, when it comes down to it, what you're going to learn here comes from watching billions in others' mistakes, but the knowledge that works best, and what works best for retail traders. When I say we got to know everything, you name a strategy, we can actually tell you the probability of you even having made money on it as a retail trader. Somebody says, I sold covered calls, I did iron condors, I did this, I traded futures. We knew the attrition rate, everything down cold, people. And a lot of what I've done here at TheoTrade is I've actually created education based on where we knew retail traders had higher degrees of success. Another aspect I like to tell people right up front, a lot of people are not easily, you just can't get in touch with them. You can always get in touch with me. And I'm serious about this. You ever need to get a hold of me after today, just go Don Kaufman, just go to support@theotrade.com. Now we use a common inbox, and we do that because we literally get a few hundred emails a day. But if you actually put Don in the subject, support@theotrade.com, it'll go directly to me. With that, let's get down to business over here. So I've done a couple of media appearances over the years. This absolutely is the TD Ameritrade network. I actually do like a weekly spot on there. It's the last time I was in Chicago. It still blows me away. I haven't been in Chicago since 2019. It's the longest period that I've gone in my entire life without having to head to Chicago. This is actually a CNBC appearance, myself pitted against Kevin O'Leary, which is probably one of the most memorable CNBC experience. As I said, down to business. Let's talk about Ultima trades. All right, we're done talking about the the beginning over here. Okay, what are Ultima trades? One of the first things that I'm going to tell you about Ultima is that you're in a unique market where I know we've seen phenomenal rallies. The interesting thing, though, about these phenomenal rallies is they've actually been met with higher volatility, and higher volatility has resulted in significantly more options premium. How many people that are tuned in right now have actually heard of the VIX? Okay. How many people here have actually heard of the VIX? The VIX, the VIX, the VIX. Anybody heard of the VIX? Okay. Most people, the VIX. right? So the VIX is one way you can actually look. There's the VIX. VIX is one way you can look at volatility, but I think that's, and I'll just use this kind of on the surface, but if you look like over the last 10 years, this is a 10-year weekly on here, right? Look where the VIX is now. And I'm literally putting my mouse like to create crosshairs on the VIX is now versus the previous, 10 years. Like the VIX is still considerably higher. Like it's considerably higher even now after this rally. It's considerably higher. And that higher volatility has created some opportunities, which I'll talk about. But the bigger one that I do want to talk about is options implied volatility skew. And again, this is where people that, if they don't know anything about options or you've never even heard the term options, I said the O word, right? But don't let that intimidate you. Skew is also at historically high levels. I'm going to show you that here momentarily. And the volatility remains at record highs. So when people see this and they say Ultima, they think it means like ultimate. It does not mean ultimate, and it drives me crazy. It drives me crazy. Like, when you're trading, you have what's called, Vega, all right? And then you have what's termed VAMA. What is VAMA? VAMA is the rate of change of Vega, okay? And then you have what's actually called Ultima. And Ultima is the rate of change of VAMA. It's like, tertiary, in terms of derivatives. So there's Vega, VAMA, and Ultima. What we're actually trading in this particular instance here, and you're not gonna, this is not on the test, I promise, but what you gotta understand over here, all right, is the bottom line is that Ultima is how we're producing edge. And I'm going to explain that here momentarily, right? There's higher volatility, we get that. There's actually higher skew, okay, I'll accept that. And it's the volatility. So when we talk about skew, okay, and I'm going to show you what skew means over here. Normally we look at markets and they're fairly normal, but there's actually what we term skew, and it's distortions, if you will, in a distribution curve. All I wanted to do is just cover what skew might look like. But right now in the marketplace, and very few people are aware of this, have you actually ever looked at the symbol skew? And most people have no idea what skew is, okay? And if you haven't, that's fine, and if you have, fantastic, okay? But we're going to come in here and we're actually going to type in SK. Oh, come on, man, type it in there. Help if I actually click SKEW, right? We type in skew, and skew is only calculated like once a day. So if it looks like dots, okay? So I'm just going to pop in here and put in like a 10-year chart. Okay, look at what skew is. Pretty much since the onset of COVID, which is like right in this neighborhood here, like skew has been phenomenal, and skew is incredible right now. And what skew provides, like when people look at this and they go, I don't even know what skew is, who cares, but this is where edge lies. Everybody always asks me, what are you doing out there? Well, skew is providing a wonderful environment right now. And that environment, like, how does it do it? How can we use skew to our advantage? Skew provides edge in the sale of out of the money options. There's huge edge in there right now. And yeah, again, I said the O word. I said the options word. Many traders, okay, are currently buying options. So, and again, for my own curiosity, and there's nothing wrong with answering some of the questions here. They're not rhetorical questions, but how many people here honestly started trading like in the last 2 years? Seriously, how many people here started trading in the last 2 years? Just a Y for yes and N for no. Like, I'm just curious how many people actually started their trading careers, if you will, in the last 2 years. Okay, there's a lot of people. So if you've started trading, what's actually interesting is when I look over at the chat and I say yes, 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 no, 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 we have almost a 50-50 market in this particular case. A lot of people here that are actually yeses in terms of that. If you think about this, the number of people that have gotten involved in the marketplace pretty much since the onset of COVID, okay, it's phenomenal. I mean, like Robinhood, and I'm not here to pick on Robinhood at all. I've actually got a lot of friends now that work there. They're kind of still up and coming, but Robinhood made it really accessible. It is what it is, right? And tons of people have started trading. And one of the interesting things about that, most people when they first started trading are buyers of options, plain and simple. How do I know that? Well, I can say this without unequivocation because most of the big brokerage firms, like when you first open an account at Robinhood, they say, you can only buy options. They're not going to let you sell options. You'd have to open up an account like $100,000 if you wanted to sell options at one of those firms, because they think, yeah, you have no idea what you're doing. And you know what? They're right. You don't know. So many traders are buying options. And in effect, it's actually tweaking pricing to be beneficial now for premium sellers. Just to give you a quick idea, yesterday was like an incredibly slow, arduous day in the market. It just was brutal yesterday. We did nothing. By the way, the market yesterday, we were like, I don't even remember. It was massively unchanged. This is what we call the OCC report, OCC, which is the Option Clearing Corp. They reported just under 41, million options traded yesterday. Do you realize that in November of 2020, the average was 33 million? Even 33 million is a lot. Check this out. The 2021 average has been about 39 million. So yesterday is a slow day and we still did 41 million contracts. It's insane. Retail traders have just gone wild. And because there's so much new blood in this business, right? It has provided phenomenal edges. And it's something that, I've been talking about this Ultimate Trades this entire year. I mean, Ultimate Trades, it's not just a place to be, it's like the place to be. It's the only place to be. All right, learning to sell options. So a lot of you guys have been in this business now for a period of time, and people hear different things, but many of you have probably heard through the grapevine that selling options is a great way to be able to make money. They don't know that much about it, right? How many people have heard that though to begin with? Like, selling options is a pretty good way to make money. But if you've experimented with it, what happens to people that initially experiment with selling options, they figure out pretty quick, this is a good way, but there's a lot of risk. So what I'm going to try to do in today's session, first of all, I'm going to teach you to exploit where those edges happen to be, because selling options isn't just a walk in the park where you're like, okay, I'm here. Instead of buying, I'm going to sell because I found a brokerage firm that would let me do that. Forget all that. We got to get down to business. We're going to separate what I call the myths from the real risks, the fact from the fiction, cut through all the garbage that's out there. And I really do mean that, and get down to what specifically works. Why does it work? And more importantly, how can you replicate it? All right. And I'm going to be honest with you. You got to what works and so forth. You have to be able to replicate this. If you can't do it, then it's for nothing. Right now, don't panic. I like to throw this up here because people do panic. Don't panic. You can do this. Maybe you don't know anything about options, and that's fine. You're okay for today's session. One of the first things I want to say, if you know nothing about options, you've never had options experience, or you're brand new to this, with all due respect, please, just grasp big concepts. Like, don't freak out. The other aspect is some of you are extremely knowledgeable. In fact, I recognize a couple of the names in the chat room over here in Zoom, and actually there's a couple people talking on YouTube now too. But so I've seen a few of you before, and I know a little bit more of this of the option side of the business. So I've really kind of catered this presentation. There's something for everyone. There's something for the absolute beginners. And there's something for the more extreme traders. And I'm actually going to be bouncing back and forth between extreme and the beginner. So again, if you're brand new here, start to learn to grasp big concepts. One last aspect before we dive right in, and that's this: selling premium. Throughout the course of today's presentation, there's always going to be somebody, and I'm telling you right now, this is where I say, pay attention. There's always going to be somebody that goes, I can't do this. I don't have the margin. There are new products, that just came out less than 2 years ago. You can now sell options premium in incredibly small accounts. Specifically, the account, to sell options premium, you would have to have a minimum of $2,000 in the account. An IRA would have to have $5,000, but you can sell options now with as little as $2,000 in the account. I just wanted to throw that out there because there's always one in the crowd that goes, I can't do this, man. Yes, you can. All right, next thing on the docket, many facets of selling premium. Listen, as I said to you guys, I grew up around this business, And I have tendency sometimes to use terminology that you may or may not be intimately familiar with. So you need to know this, like selling premium. Selling premium means selling options. It also means credit spreads. It also means short call put spreads, right? Have you guys heard these terminologies? I do credit spreads. I do, bull call spreads and bear call spreads and bull put spreads and bear put spreads. Oh my, right? I do delta neutral trading. Delta neutral trading can also be construed as selling premium. I could sell naked. That sounds exciting. Selling premium can be used to create both bullish and bearish trades. Generally speaking today, though, I'm going to talk about a lot of market neutral stuff. Listen to me. You don't have to listen to about a bunch of MACDs and Fibonacci's and Bollinger Bands. I'm not anti-charts, but I'm a quantitative trader. That means there has to be numerical value pretty much in every way, shape, or form in my head to do anything. What I'm saying is it has to be probability, okay? And we have to know that what the outcome is going to be. When I say the outcome, like if you were to do this trade, not once, who cares about one time? I made money one time, means nothing. Can you replicate the trade hundreds of times? That's what matters to me. Let's get down to business here, probability and profitability. As I said, I'm a quant, okay? Quants talk about probability because your trading is based on probability. You should know that. You and I, we can create trades all day long with a 90% probability of success, but you can still lose money. Now, I put that sentence in there for one specific reason, okay? No matter how long I've been in this business. And you guys, please, okay, got to understand something. I grew up around trading, right? And then I get into the brokerage world and I'm running an education division for a brokerage company. And I see all these other educators and these educators are around, the industry and they're like, yeah, man, come with me. I will make you right 90% of the time. And I always thought to myself, I go, but I can teach somebody to be right 90% of the time in about 2 seconds. You want to be right 90% of the time? Look at this. Go to any options chain. Now, some of you have never been in an options chain before. So just bear with me. We're going to come in here. Okay, we're going to type in spider. Everybody familiar with the spider? SPY. You're like, what is SPY? It's SPY. It's a spider. It's the S&P 500. Okay, do you have to say it like SPY? I do. I am strange. I've had way too much caffeine or maybe not enough. Anyway, you come into a trading application, right? And I'm scrolling. Look at all these strikes I have open. Look at this. I'll knock into 14 strikes. See this where it says open interest? Change that. Change open interest and go to probability OTM. That means probability out of the money, right? All these calculations in here. We didn't came up with this stuff, right? This is on every trading application now. Probability out of the money, probability of touching, probability in the money, right? We've worked with a phenomenal team at Thinkorswim. And it's like the first platform to have this. The point that I want to make is if you want to be right 90% of the time, do you realize you can open up a trading application and go, hey, look, come here. If you sell this option, it's the 500 option. It says right here, you're going to be right 91% of the time. I go, I'm a winner. I'm a winner. I can make you right 91% of the time. So I absolutely, and bear with me, despise when people, they ask me, how often are you right? I go, I am right as much as I want to be. And they think I'm being sarcastic. You want to know why? Because I am. Probability doesn't mean squat. And probability alone doesn't make you profitable. Remember that. Just keep that in mind. Because as I said, there's got to be some separation of the fact from the fiction here. And the fact is, probability, you can be right 95% of the time. It doesn't mean that you're going to be able to make money because you should think about the dark side of the force. 90% of the time, I'm right. But 10% of the time, what happens? Okay, they come for you. Markets are always trade-offs. Higher probability, higher risk. You'd be right 90% of the time, still lose money. So where can you find edge? Because that is what we're really here for. Like, I don't want to hear that I can do a high probability trade. So can I. In less than 2 seconds, we showed you to do a trade that had over a 90% probability, okay? We need to be able to find something definitive. Meet edge. What's edge? Edge simply means that I can do this. And people always want that almost a quintessential definition for the word edge. Edge means you can go out there, you can do it again and again and again and again. And even if you are to take losses, and everybody in trading takes losses. Everybody in trading takes losses. But even if you are to take losses, the wins and the profitability overcomes those losses. And you find a true mathematical nuance, a mathematical edge, if you will, in there. And that's what you're here for. Okay, good, because that's exactly what we're about to show you. So I'm going to start with something maybe a little basic. Okay, and we're going to work our way into the extreme. So here's a $50 stock, and I love to start with my $50 stock. And if you guys listen, if you've never been here before, every stock that I ever talk about, I don't call it stock, I call it stock. Because again, I have had a lot of caffeine. So stock to me is ST. Okay, stock. Stock's trading at 50 bucks. Now, I want to lay down some groundwork here. To conserve capital, I don't want to own the stock. Fair enough. So we're not going to own the stock. So what are we going to do? We're going to trade some options. Is that okay with everybody? We're just going to trade options. What are we going to do? We're going to go out. We're going to go way out of the money. And again, for ease, I'm initially going to go out and I'm going to sell, okay, a 60 call. And that 60 call is going to be trading for a $1 credit. I'm going to put it down here so everybody can see it. We're going to sell. We're going to make it a 60 call, and it's trading for exactly a $1 credit. And we're going to say that 60 call, I don't know, let's get crazy. Let's say it's good for 1 month. All right. So a few things we've already covered. Now, some people have never, they're coming here for the first time today. You've never traded an option, or you've traded an option, but you've never sold an option to open. Or if you look at this example, this is a scary example because technically in this example, I'm selling what's called naked. Just bear with me for a second. The example, okay, is to lead you down the proper road to start to understand edge. So let's put this into more context. What do I mean by that? So here's stock. Do we own the stock? No. Do we want to own the stock? No. Should we own the stock? No. Why don't we want to own the stock? It has a huge amount of capital. Everybody today knows that. They just trade options. Most people are not familiar with selling a 60 call. So let's not talk about selling a call. Let's talk about buying it. When you trade options, okay, options, it's kind of a double-edged sword. Option buyers have rights. Option sellers have obligations. So let's not talk about you selling the 60 call. Let's talk about you buying it. So if you went out right now, you go out into the open market, it's open right now, and you buy a 60 call, you go, I'm buying the 60 call, right? By the way, okay, palms this way means seller. Palms towards me mean buyer. I am a buyer, right? So if I come in and I buy a 60 call, I'm going to buy a 60 call. That gives me the right, not the obligation to buy the stock at 60. Why would I want to buy the stock at 60? Clearly, okay, if I've done nothing else in this stock, right? If I've done nothing else in this stock, if I buy a 60 call, I must believe that that stock is going to go soaring up to 60. Am I going to be right? Maybe, but it's a lower probability. Why? Because the stock could stay flat. The stock could go down. The stock could go up. It could do a little dance. It could make a little love. It could keep down tonight. But the 60 call, that's quite a ways away. What does the 60 call, though, give me the right to do? It gives me the right to buy the stock at what? 60. So if I buy a 60 call, I have the right to buy the stock at 60. Do I want to buy the stock at 60? No. So why am I buying the 60 call? Because I just want the right to buy the stock at 60. But let's say the stock did jump. Let's say the stock goes from 50 and jumps all the way up here to 70. You're like, woohoo! What's a 60 call going to be worth with the stock trading at 70? Well, if you have the right to buy the stock at 60, everybody else in the world would have to go out and pay 70 for it. So if they have the right to buy the stock at 60, you could buy the stock at 60, sell it for 70. You make $10 minus the dollar you originally paid. You're up $9. You're high-fiving everybody. But would that be rare? And the answer is, Are we okay? Is everybody okay at this point? So I just want to make sure that we understand conceptually why anybody would want to buy a 60 call. They'd want to buy a 60 call because they have the premise that that stock is going to soar. That is a lot of what's going on right now. And they're not trying to make 10 bucks on it. They're trying to buy something for $1 and double your money. They're trying to do it in Tesla. They're trying to do it in NVIDIA. They're trying to do it in Ribbon, all right, which just listed options for the first time today. I mean, that's what's going on. Come on, people. Come on, people. Admitting it's the first step. How many people have done that kind of example where they buy an out of the money call and then they just get down on their hands and knees and they go, oh, option gods. Oh, please let the stock run fast and furious. Most of the time, though, what happens? Expires worthless. So I'm going to actually look at the other side of that. In options, you could be a buyer, but in options, you can also be a seller. Okay. This weirds people out because they immediately think to themselves, how can I sell something done that I never owned? You're selling yourself into an obligation. Now, please understand something. Okay. Selling a 60 call could be very, very high risk because if you sell a 60 call, you don't have a right, you have an obligation. You have an obligation to give somebody your stock at 60. Think about that. Selling a 60 call obligates you, okay, to give somebody stock at 60. You go, but I don't have any stock. You're exactly right. So what can happen if you sell a 60 call? Well, if you sell a 60 call, you can collect $1. What's the most you can make? $1. Like nobody comes back a week later and goes, that was a hell of a 60 call you sold me. Here's an extra $1. Listen, if you sell something for $1, the most you're going to be able to make is $1. That's it. So the most you can make is $1. So let's go through an example. If the stock stays flat, what do I keep? $1. If the stock stays right at 50 over the next month, I keep $1. If the stock goes anywhere down, what? I keep $1, right? If it goes down to 49, I keep $1. If the stock comes up here, let's get crazy. See if the stock goes to 55, what happens? I keep $1. Okay. If the stock goes all the way up to 59, what happens? I wet myself, but I still keep $1. If the stock goes to 60, technically I still keep $1. Then I'm really nervous. The only way you start losing money is when you start getting the stock, not over 60, but over 61, because $60 plus the $1 credit you received, yada, 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 the stock would have to get to 61 just for you to start to lose money. But let's get crazy. Let's say the stock jumps from 50 and goes all the way up to 70. Could that happen? If the stock goes from 50 to 70, you're like, oh, throwing up in the streets and stuff. It's awesome. Okay. But the thing is, it's a rare occurrence. I want you to think about this trade, not about what you're going to make or lose. Okay. I want you to think about this trade, though, from a probability point of view. The probability of making the $1 is incredibly and inherently high. Do we understand that much? Okay. But the probability like that then becomes a high probability trade. Now, I want to give you the basis, all right, first of what a high probability trade is. I'm not showing you where edges, okay? All I want to do is give you the basics, the background that you as a trader can go out and you can sell an option that you never ever owned. You're selling yourself into an obligation. And of course, you know, everybody's worried what happens if we shoot all the way here to 70. I'll tell you exactly what happens. If the stock goes from 50 and goes to 70, somebody goes, I call upon you, sir, to deliver me stock at 60. Why? Because you sold them a 60 call. You're obligated to give them stock at 60. You go, but I don't even have the stock. Yeah, you have to go out and buy the stock at 70 to give them the stock at 60. How you feeling then? You go, I don't feel so special. Exactly. But get the premise that this is a higher probability trade. All right, let's go into the live markets. Okay, live markets. Does anything even trade at $50 anymore? You know, I was looking at Twitter. I like to look at stuff like Twitter because Twitter is like the only $50 stock. Okay, that, and I like to poke a little bit of fun at Jack Dorsey. Come on, who doesn't? Okay, who doesn't? It's Jack Dorsey. I know. All right, he's got a few $1 billion. Yes, and still looks like he looks. If you haven't seen a picture of Jack Dorsey, that's one worth Googling, people. It has to be a recent one. Got to be a recent picture of him. Okay, it's awesome. So people are like thinking about that. You're like, what do you mean? Don't worry about what I mean. Just check that out. I'm going to go way out here and just show you. Stock's trading at 50. If I go way out here to like a 60 call, look, collect $1 on it. Thought I was crazy. I'm not. All right. So with 60 calls trading right for about $1. You can go even further out of the money. I just want to show you the probabilities associated with these trades. It doesn't, again, nothing in here right now. We're not at the point where we're constituting what a good trade is and what a bad trade is. I just want to show you the probability versus what you can collect. I mean, that's a really high probability of keeping, for instance, $1. You sell this thing for $1. What happens to you? You collect $1. You know, you have like an 80 or 90 or even 95% chance of doing so. And that's kind of where I wanted to start this off. Now we're going to start to step it up a little bit. We okay? Everybody good? Everybody good. Looking around. I don't see a lot of questions coming in. Okay. I see a couple people talking in the chat room over here. All right. So just making sure. Pause for a second. Make sure we're all good. All right, Stu, Al, I can see you guys are okay. So just making sure. Anybody else? Anybody else? So this is the time. If you're completely lost, by all means, let me know, or forever hold your peace. Just a Y for okay, and a maybe not so okay if you're not okay. All right, I like it. Okay to go. Okay to go. When you sell options, it's equivalent to what we term positive time decay. Now, some people are into this, some people are not, but we're going to spend a minute and review time decay. Now, this is, when it comes to this particular presentation, I love talking, by the way, I love talking about selling options premium. And I love talking about Ultima trades, because no matter how many times I've done this presentation, I have had traders that have been in this business for 30 years and not understand how options truly decay. And it's one of the things that just blows people away. So in terms of this presentation, if you're actually experienced and you're like, oh, this is going to be too basic for me, get ready, because it's not going to be basic here in about 2 seconds, right? So we're really going to step up the, and for those of you that are brand new, you're going to get something that legitimately it takes people 20, 30 years to kind of figure out. Option decay. We're going to review decay. When you sell options, they decay, right? When I say they decay, options decay at what we term the square root of time, okay? That was the worst decay graph ever. All right, there we go. You're going to go out and people, they like to go out and they like to buy an option, okay? They're going to buy a call option. And they're going to buy a call option, and let's get crazy. You're going to pay exactly $3 for it. So right here in the inception of the trade, okay, you paid $3 for it. Now, you went out, you buy an option, you paid $3 for it. If nothing happens to the stock, the option starts to burn. It starts to dwindle. The only way I think of this in my head for some reason is when they pour water, like on the Wicked Witch. She's like, I'm shrinking, right? Because that's exactly how you feel. So anybody here that's newer to options will understand this example, okay? This is what I call the life of the newer option trader. You're a new option trader. You just learn about options, okay? Somebody tells you, you should go out and you should buy an option. You should buy a call because it's cheaper than buying the stock and maybe you'll make money. So you buy the option, and that option has exactly, let's say, 1 month to go to expirations. Options are time sensitive, okay? The longer you go out, the more that option though is going to cost, right? So if I 1 month left, it's only going to cost me $3. But if I go out like 5, 6 months, that is going to be one juicy option, which is not going to be good. So you go out and you buy yourself a call. And when you buy a call, for the first week that you own the call, nothing happens to the stock. And you're like, oh no, move. And you're like kicking the stock around. Move, animal. And the option goes from $3 and it drops to $2.70. A whole week goes by and you only lost how much? You only lost 30 cents, okay? And everybody's instinct, it's always the same. By the way, like, I'm not saying this because, I've experienced it a bunch, right? I worked at a brokerage firm for 15 years. I got to see everything that you ever did on the back end of your trades. Like, I know every thought that you're ever going to have. I've gotten every email about this, and everybody's thought on this one is, a week passes and you only lose like 30 or 40 cents. Their first instinct is, it's never I'm wrong. Never I'm wrong. They go, I'm okay. And they're like kind of looking around. They're like, I'm okay. I only lost 30, 40 cents. Okay. You're okay. The very next week goes by. Now you got some problems. The option drops from 270. Okay. Now we start to kick in a little decay. Now your option is going to be worth $1.90. You go, oh crap. So the first week you were like, I'm okay. By week 2, you're like, I need this stock to move. Come on, jumpstart it. You're like trying to shock it back to life. By 3 weeks into it, the thing is $1.90. You're like, oh crap, this is going to hurt. Next thing you know, the option's worth like what? 40 cents another week later. And by the way, when the option drops down to 40 cents, that is what we turn the terminology like, screw it at this point. I'm just going to go for it all. And then the stock actually drops and make sure, because the stock heard you and it's evil there and it's worth zero. How many people have ever experienced that? That, people, is the life of an option premium buyer, which is your $3 option evaporating roughly to absolutely nothing. By the way, it loves to string you on. Come on, like a little fish on a pole. Come on. And yeah, that's the livelihood of a premium buyer. There's nothing wrong. Listen, I made a career. I've been on both the buy side and the sell side of options, but right now, without unequivocation, it's a seller's market. But how many people, again, have kind of experienced this? A couple of people like me. Okay. By the way, this is not a yes or a no. You could just say me. As we said a moment ago, this is like, the 12-step program for options traders, and admitting it is the first step. So yeah, admit it. When you know that you've done wrong, by all means, please let us know. So the option goes $3 is worth zero. What was not told to you at the time, though, and when people look at this decay graph, what they don't understand is options do, in fact, they decay, okay, in that exponential fashion, but that is what we call a near, you can't read that, it's too thick. It's too thick. This is actually what we term, okay, near money options. Basically, this decay graph for most of you that you've been just sworn by, it's actually not right. We're not going to look at selling near money options. We're actually going to look at selling far out of the money options. Now we're going to discover a little bit more of an effective way to do this. And then we're going to show you live examples, right? So we're going to go out there and we're going to do the exact same example as we did. So earlier we're talking about a $50 stock, but there's only one $50 stock, Jack Dorsey's $50 stock. He's still worth a couple of billion. Now that's Square and everything else that he owns. Anyway, it's a $100 stock. We're going to go out, okay? We're going to sell a 120 call. The 120 call, we're going to make this worth exactly, again, $1 credit. So I'll take it down here again. You sell a 120 call option and you get to collect a $1 credit. Now this one, I'm gonna really confuse you. This one has actually 3 months left. 3 months. Put stop right there. Do you realize stock's at 100? Do you own the stock? Do you want to own the stock? Okay. I'm all the way out here at the 120 call. What's a 120 call? That's 20% out of the money. That is, put on your big boy pants. We are 20% out of the money. You realize, like, even if the stock started rallying, it would sound like that Price is Right thing. You guys remember what I'm talking about? Even some of you have absolutely no idea. Okay. I miss the days of Bob Barker. Anyway, even if the stock started rallying, you got like a half an hour before that stock is getting to 120. No, it would take days, possibly weeks. It's a 20% move up, and literally a 20% move up for you to start losing money. Time out. Is that a high probability trade? Yes. Where's the edge? I'm going to get there. What people don't realize, though, all right, what they don't realize is this is a very, what we term, defensible position as well. You're 20% out of the money. Even if the stock came soaring towards me, you're like, bring the pain. Like the stock is starting to rally. It's going to rally 20%. All right. Stocks do rally 20%, but it's not like it's going to happen literally snap overnight. Think about that for a second, because again, it makes the position that much more defendable. Does that make sense to everybody? So it's a high probability trade. You can defend it. What's the most you can possibly make? $1. Don't worry about the dollar, because all you have to do is just amplify the trade again and again and again and again. What is bothersome to some people, though, is I don't want to wait 3 months. You don't have to wait 3 months. What if I can actually pull huge money out of this every month, huge money out of this every single month, okay, just month to month, and take very nominal risk? Does that interest you? Okay, sure. All right. So here's the stock at 100. If the stock goes anywhere down, I keep my dollar. If the stock stays flat, I keep my dollar. Even if the stock goes up substantially, stock gets to 110, I keep my dollar. Stock gets to 115, I keep my dollar. All right. At about 119, I'm getting a little nervous, but I still effectively keep my dollar. The only way you're really taking a huge loss on here, okay, you got to get up to like what? 125, like 135. I mean, we're talking chaos in trade. Now, as long as we understood the simplicity of that example, we're selling a way out of the money option. Why are we selling a way out of the money option? Anybody? Quite simply because, okay, there's edge in way out of the money options. I'm going to drop back to the spiders here. Okay, and you can see I've got positions out here, but I'm going to drop back to the spiders. And I want to drive everybody that's experienced crazy. So I'm actually going to go, I know it's cruel, isn't it? I'm going to go all the way to the March options. The March options have 122 days left. Okay, 122 days. That is way out there, people. I'm out there and I'm loving every minute of it. So we're going to go way, way out of the money. Okay, and I'm going to come in here and I'm just playing around with this. We're going to look at probability out of the money. And I'm going to try to make this trade as close to my example as I possibly can. Right? All right, this will work. So here's a trade that has a 93% probability, right? Just pay attention because this one's real now. When I say it's real, okay, if I want, I can go execute upon our lovely little trade. In this example, okay, I am going to sell, okay, a March, and this I'm going to do a MAR 520 call, and I'm going to collect in this case. Well, the market's $1.15, $1.19. Let's say I'm going to collect $1.17. I can probably work this at $1.17 and fill it. Okay, but I'll make it nice and round. I'm going to collect $1.16. Okay, so I go out there and I'm going to sell a March 520 call for $1.16 credit. That's a live market. Okay, that's it. That's all I've done. It's 520 call. Where are we trading right now? 470. Woo, woo. That is far. It's another what? 50-point move in the spiders for me to lose money. But what you're thinking, and people can't get by this. Number one, a lot of people are probably thinking to themselves, I don't have the margin to do that. I told you, don't worry about margin. You can circumnavigate the margin requirements. So don't even worry about that. Number one, told you don't worry about margin. Number two, you're looking 122 days and you're thinking to yourself, oh, seriously? I have to wait 122 days to be able to make $1.16? Okay. Thank you, Captain Obvious. You don't have to wait 122 days to make $1.16. What if we could make some serious money and just do it every 30 days? Okay. What if you've been trading some of the wrong options? Because a lot of people don't understand what Ultima really is. This is a March option with 122 days. The question is, what will that 520 call be worth pretty much 30 days from now? 30 days from now, assume, just do me a favor, assume that there's no movement. I know the market can move up, the market can move down, but I want to show you one aspect, okay, that everyone seems to miss right now. And the aspect is this: options that are far out of the money are decaying at an incredibly fast rate right now, okay? So what I'm going to do is, if I fast forward 30 days, what's 30 days? Instead of looking at the 122, the March, I'm going to look at February. I'm going to open up the February options, and I'm going to scroll all the way out, okay, to the 520 calls. And there they are, okay? And lo and behold, what are they trading for? In this case, about 57 cents, okay? So after what? Less than 1 month. This is less than a month. I can turn around and buy back those same March 520 calls, okay? I can buy them back for roughly 57 cents, all right? Debit. So everybody looks at this. Everybody looks at this. And then again, they're like, okay, so it's making a little bit of money in here. Really? So you have this $1.16, okay, minus obviously what? 57 cents, right? You're making 59 cents. Making 59 cents, or you're actually making beyond 50+% of the premium decays in the first 28 days. That is unbelievable. You're making over 50%, but all you're basically doing, you go, so what do I have to do after I make 50%? Move on to another option. What are you, crazy? What do you think, you're going to hold it the next 94 days? Okay, listen, how you make money in the next 30 days doesn't have to be a 30-day option. Like, you don't have to sell an option with 30 days to go and then ride it into the ground. Why wouldn't you sell an option that was super far out of the money? Why wouldn't you sell an option that had 100 days left or 122 days left? Burn the option, make 50%, get in, get out, get on with your life. Do you have any idea how far out of the money 520 is in the next 28 days? You know, the probability of going to 520 in the next 20 days is absolutely minuscule. We're talking like a 1, maybe 2% chance. Can it happen? Yes. But if you want to learn how to get edge in this business, you better pay real careful attention to this example, because you're making over 50% in 28 days time. People, they just don't get it. They don't get it. You go, how is that possible? How have I missed that? Okay. What Ultima has to do with, it's not about time decay. It's about volatility. If you're selling right now, short dated options, you are out of your gourd. You're out of your mind. See, the volatility in the short duration is 10%. Do you know that the volatility back here is 20%? So I'm getting 2 times the options premium, but it's more than that, because when you start learning more about options, okay, you start learning more about options, start opening up an option chain, people have no idea what they're even trading most of the time. You know, the volatility of these out of the money options, 38%. Do you know how much juice is in that? Okay. I mean, that is one big monkey. I mean, 38% implied volatility. This is a 320 put. Dude, I don't even know what a put is. It's over $100 out of the money. It's trading at a 38% volatility. Could we crash? Oh, we could crash. But you're only going to hold the trade for like 20, 30 days. And that option is going to burn. It's going to burn. It's going to burn quickly. All right. I cannot stress this enough. People, again, they look at this and they think to themselves, how could I have missed this? This has changed. It has shifted since the onset of COVID. So volatility is found in these back month options. Skew is phenomenally large in these back month options. Like, you can even open up the February options. To show you another quick example, you can open up the February options. All right, I'll switch this back to probability out of the money. If you look at the February options, because you're like, oh, maybe that's just an anomaly. He found a special one. Look, I'm just picking an option right around $1. See these? They're the 512 calls. The market is basically $1, $1.02. What's that option going to be worth like 30 days from now? Open up the 66-day options. Go look. Okay. Open up those 66-day options. What are they worth? 36, 37 cents. Wait a second. So you can make even more, right? That's making like 60+% on your money for holding a position for less than 30 days. That's what Ultima's about. I mean, this is the stuff that people, you have got to learn how to do this. Because right now, I mean, you look at this marketplace, and again, I like to bring this to your attention, right? You look at this marketplace. Well, you know what? That was the right chart to have up. There's your market. It's always going to go up, baby, until it doesn't. How are you going to function when markets don't appreciate? When picking stocks is next to impossible, right? We've hit like escape velocity right now in the S&Ps. And I got to be honest with you. I'm a premium seller right now. I don't want anything to do with that move. This move scares me to death, okay? I don't know anything. You don't know anything either, okay? But this move is the scariest thing. You can point fingers to the Fed. You can point fingers anywhere you want. But here's the reality. Who cares what's causing it? Who cares? Realistically, you have to function in this, and not function today. You got to function a year from now, 2 years from now. You got to function, a decade from now in a marketplace that has clearly got some dysfunction in it, right? And dysfunctional markets, there's always going to be edge in some way, shape, or form. It's why I sell options so far out in time, and it's shifted dramatically. Again, maybe you've noticed in the example, I sold options a few months out. Traders tend to sell shorter dated options because they don't know what they're doing. That's why you're actually tuning into this webcast, because if people ask, what is Ultima? Ultima has everything to do, not with selling options. Okay, anybody can come in here and go, you should sell options. It's not about selling options. It's about what options to sell, how far out in time, how far out of the money. That is what we do here at TheoTrade. We are criteria driven, right? We are criteria driven. We are all about specifics. What option do I sell? Should I do a 90%? How would I protect the options? Okay, that's what this presentation is about. And I'm going to go a step further because some of you have already been through the sale of options premium. Now, I asked this question again, how many of you, again, have gone out and sold some options premium at one time or another? Because what happens to people in the options premium selling business, okay, is simply this. It's what I call the 90% probability and the 10% hammer. And I want you to understand, okay, I really do. I want you to understand that selling options premium, it's not going to just be like a total cakewalk. I just sell some options, 90 days or 100 days out, and I just make my 50% and move on. What a lot of people have done, and those of you that have experimented, now this is for the people that are a little bit more extreme. I'm going to explain here just for the next 2 minutes. Okay. For the next 2 minutes, I'm going to be talking specifically to those of you that have actually sold some options. But at the same time, in the next 2 minutes, please, for those of you that are brand new, stay really focused because you are so likely to walk down the exact same path of just abject stupidity that selling options premium allows you. And I'm sorry, okay, to be so literal saying that, okay, but selling options premium breeds just that. When I say you selling options premium, do you understand that when you do trades that have a 90% probability of making money, what does that do to you inside? I'm going to tell you exactly what it does to you. So you go out and you can do a trade, and you're going to find a trade called an iron condor. Everybody right now is, I'm going to Google an iron condor. Don't do that. Okay. You're going to go out there and you're going to find a trade called an iron condor. Okay. What is the iron condor? The iron condor looks like this. That's the risk graph. It's the risk graph. Okay. The iron condor means you sell a call way out of the money and you sell a put way out of the money. So you sold options, just like I did. And then you buy a call way out of the money and then you buy a put way out of the money. So everything you sold, you bought something, right? Why? Because it's called your hedge. And then the trade has a 90+% probability. So what happens to everybody in this trade is they go out and somebody says, you got to do this iron condor. And if you don't know the difference, you don't know what the hell you're walking into. You're going to do this iron condor. You're going to have a 90% chance of making money. And of course you go, this is what I want to do. So you take this class and you pay $500-600 for the class and you learn to sell an iron condor and you sell the iron condor. Lo and behold, hot damn, you made money. It's amazing. And the first one you did it in the spiders. And you go, I made money. This is good. And you just did one contract because you were trying it out in the spiders. The very next month, you do the exact same trade. Lo and behold, the very next time you did the trade, holy crap, you did it again. You made money 2 months in a row. Now, you've been knocked around in options before. You've been knocked around in options before. So the fact that you just made money 2 months in a row, you're thinking, this is going to be good. So the third month, now you're starting to, squawk the feathers. And now you're not going to do one contract in the spiders like you were before. Now you're going to do 5 contracts in the spiders because, you're feeling like feeling a little froggy. So you go out there and you do your 5 contracts in the spiders. By the way, in the third month, the market, it lets you make money again. So now 5 contracts in the spiders, you're like, just bringing it home, baby. Just bringing it home. In the fourth month, you go, I'm too big for the spiders now. Okay. And that's when I say squawking the feathers, the head starts to move around, So you're too big for the for the spiders. So then you hear about this product called the SPX. If you've never heard of the SPX, I personally call it the mother of all products. I kind of know it well. I made markets in there. So if you go into the SPX is exactly 10 times the size of the spiders. And the SPX begs you to come in and goes, come, door is wide open. Okay. It's like the Roach Motel. You get in, you do 10 contracts. 10 contracts in the SPX is the equivalent of 100 contracts in the spiders. It's the equivalent. 10 lot in the SPX, the equivalent of 100 lot inside of the spiders. But you do 10 contracts. Why? You just had 3 winning months in a row. On the 4th month, again, you're huge. You're absolutely huge. The market sees you coming from a while away. It's like literally, it's been like, come on, come. First time you do some size, boom, train wreck. You get completely wiped out. Not only do you lose, okay, those 3 months of profitability, you lose half your trading account. Lose half your trading account. It's absolute train wreck. The losses exceed all of the gains and then some. And then this is, by the way, if you've ever experienced this and people go, holy crap, it's like this guy can see my account. Yeah, I could for 15 years. Like specifically, I would look at your account. I've probably looked at over 100,000 individual accounts, but most of the stuff that I did was big data, meaning that I would say, how many people have done an iron condor? And the computer spits back at me, all right, 600,000 people have done an iron condor. I go, okay, over a subset of 6 months, how many of those people still do iron condors? And the crazy thing is in a subset of 6 months, the answer was like 5 of them. You have like 600,000 people that were doing iron condors. But after 6 months, nobody was doing iron condors. And I'm like, oh, that's kind of interesting. Okay. This is the kind of crap that no one understands until they're actually positioned there. By the way, if that story resonates with you because you lived it, how many people have lived that? Okay. Just say, yes, I've lived it. Okay. I am a victim. If you've lived it, fantastic, because you get where I'm coming from. Because I want you guys to understand that anything you've ever thought, anything you're going to do in this business, it was explained to me. Okay. I got into the business in the late 90s and I actually worked with a group of traders. Most of them had been down on the floor since the mid 70s. And I would stay up late at night and be like, oh man, I figured this out. They go, hey, kid. And this is, again, I was 22 years old. They go, kid, okay, there is a call and there is a put. You can buy it and you can sell it. And then they pat me on the head and they go, what the hell you think this is? You just got to learn where the edge lies. And that always resonated with me. I'm like, oh yeah, that actually kind of makes sense. It's call and a put. Like I've been down here since the 1970s. This is the late 90s. Okay, where were you? I go, I wasn't even born yet. And that's the reality of it. All right. Again, it's crazy, but it's like I can see your account, but you could. Everything you've ever thought and done, we've been there. We've traded it. Okay. Then, by the way, after you go through this losing experience, it is eye-opening, gut-wrenching, but eye-opening. Then you go to another class and you pay another $500 and somebody says, any trade that you have, you can fix it. I know I can fix it. This, okay, is the true degenerative call of the wild. Fix is a really dirty word. I hate the word fix. Okay, I am ever the cynic on fixing trades because when people like these are the worst stories ever. And when working at Thinkorswim and TD Ameritrade, people would email us and be like, so I tried to fix trades. By the way, if you got to me at TD Ameritrade or you got to me when we were Thinkorswim, you really screwed up. Like I didn't answer emails from every, like the, general guys in the trade desk would answer most of the emails, regarding this, but I actually was on the risk management team for years and sat in a risk committee. Like if your email got to me, you were a big issue out there. And I would see people try to fix trades, but they never realized you're fixing a trade, just get out and grab a shovel and just keep digging. Anytime you're fixing a trade, you know that you can't. Okay, think about this. Reason with me for a second. Anytime you're trying to fix a trade, it means more risk. Has to mean more risk because you can't fix a trade and more transaction costs. By the way, the transaction costs, there's always one in the crowd that goes, I have Robinhood. But anytime you fix a trade, you are throwing more good money into a very deep hole. Okay, and you're racking up more transaction costs. Yes, some fixes may work, but the very notion of fixing a trade throws more good money after bad. Okay. And that's just not going to play in this business. You need to understand something about this business. Okay. The best analogy I can give you for trading is, good trades gone bad, right? Listen, if you took a car and you drove it off of a cliff, okay, car right off the cliff, and you brought the car to the body shop, what would they say to you? Like realistically, like what the body shop say to you? They go, "Oh my gosh, what do you want me to do with this? It's a total, it's a loss. Bye-bye. Okay, get out of here." And they go, "No, I want you to fix it the way it was." They go, "Well, it's a $50,000 car. For us to fix it, it'll be 65,000. And for 65,000, I'll make it brand new. Of course, you could go out and buy a new one." It's just crazy. Like people don't realize though that it's the same thing. You got to do this right. You got to learn correct position structure, right? You got to, when I say position structure, it's not just about good trades gone bad. Okay. It's learning how to sell options premium correctly, right? From the get go, it's position structure. And I want you to think about that when I say position structure. First of all, okay, there's one aspect. If you're going to get in this business, you should understand one aspect that you must understand. Okay. No matter what you do. And I'm telling you guys right now, maybe you like what I'm saying, maybe you don't. But no matter how long you're going to be in this business, okay, I'm going to tell you something I want to stick with you for the rest of your life. Okay, here's the market right now. When I say the market, make it the spiders. Like, look, here, let's go over to the spiders for a second. I didn't even trade live today, but it's fine. But just go to the spiders for a second. It's a $470 product, right? It's a $470 product. Okay. And I'm like, oh yeah, let's go out here and let's sell something out here. And then, oh yeah, let's go out here and sell there too, because I could sell a call up here and then I can sell a put down here. Okay. And I ask you, what happens? What happens if we fly up here? What happens if we crash? What happens if you wake up one morning into a crash? I ask you, sir, what is your exit strategy? You go, I'm going to get out. You're already dead. Maybe nobody's told you that. Maybe nobody ever wanted to tell you the truth. Okay. But if your exit strategy, when something goes massively awry in the marketplace, you could wake up, okay, Janet Yellen got together with Jerome Powell, got a little bit of like a witch's brew going together. They decide that's it. We're going to jam interest rates higher. We have an inflationary problem. Okay. Markets get just annihilated. If you tell me you're going to get out, you don't know this business. That market is going to move faster than you can ever dream. Okay. Enter this. If you want to learn to sell options premium, you want to learn to do this correctly, you have to learn, okay, the hedges. There are literally 1, 2, 3 things that we use here. The first one is actually termed, okay, a risk twist spread, better known as an RTS. The next one, okay, is what we call a Vix Vol spread. The last one is actually termed a gamma iron. Time out right there. What are those? Enter the hedges. What a hedge happens to be, it's a risk mitigation tactic. These hedges will cost you something, okay? It's like you can jump out of an aircraft, okay? 99% of the time, everything is going to go swimmingly, okay? Pull the main chute, you're fine, you land, okay? You do that a couple thousand times and sooner or later you have an issue. Guess what? It's why you have a backup chute. These are what we term preemptive hedges. What is a preemptive hedge? I am not going to sit here and preach to you about what this marketplace is going to do. If you have not noticed, okay, look around the economy right now. We're in sheer and utter chaos, okay? I'm going to give you an example because I don't want you to think I'm throwing those terms out there to utter chaos. What do you think is going on? Is there inflation? Maybe. Retail sales numbers came out today. They were phenomenal, 1.6%. It was incredible. Like who would have thunk? Who would have thunk? Oh, the inflationary pressures last week came out. They were 6.2. It's the highest it's ever been in 30 years, but retail sales keep driving. There's no houses even available on the market. And if they were, don't worry. The low price of $4 million will get you a house too. But at the same time, the JOLTS number came out. Do you know what the JOLTS number is? It's called the take this job and shove it indicator. The take this job and shove it indicator. Did you know that 6% of the United States, just the US, workforce quit in September and October? 6%. Okay. I apologize. That was August, September. I wasn't including October. October, they believe, is accelerated, but they don't have the definitive numbers yet. Okay. Bitcoin, that's the place to be because they say that Bitcoin people have made money and that's why they don't need to work anymore. It just goes on and on. Like if you think you can handicap what this marketplace is going to do, think again. All right. I mean, I'm being really serious about this. The spiders right now are trading at a $470 price point. I will have a risk twist spread or not all of these, or a Vix volatility spread or a gamma iron. Let me explain what some of them do. I think that the Vix spread makes the most logical sense. So I'm going to explain it. Okay. When the market goes down, if the spiders crashed, the Vix will do what? Explode in value. The Vix will go up. You don't know how far up, but it's going to go up. It's going to go up big. What a Vix volatility spread is, it is a trade that by design, okay, it's in the Vix because it's a Vix volatility spread. By design, right, it's like, again, it's going to be a cushion that'll explode in value. So it's a very, very small trade that costs a very minuscule amount. Actually, you pay nothing for them up front, but can explode in value. Why? I don't intend to just go out there and sell things naked. Okay. Let me give you this example. Like I did earlier, I'm going to sell 520 calls. I'm going to sell them for $1. But at the exact same time, I'm also going to sell. Did you guys see earlier? I was looking at like 350 puts. Realize those are going to trade for $2. Then I'm also going to go out there. I mean, why not? The market rallies, sells off. I'm also going to sell, for instance, like a 500 call, collect $1 on it. Okay. Before you know it, the market rallies a little bit more. I'm selling like a 540 call, maybe collect something on it. Okay. I'm going to turn around and I'm going to sell. Okay. 370 put. Before you know it, I'm probably also going to sell a 320 put. What I'm trying to show you is I'm actually selling on both sides of the market. You go, where do you want the market to go? The market can go up and the market can go down, and the market will go up and the market will go down. Okay. In this particular instance, all I am trying to do, I want to get in this business and I want to get out of this business, and I just want to do it alive, and I want to do it consistently. In 30 days, every 30 days, I'm going to be rolling that inventory over. Okay. This is an inventory management business. You know, you see these things like these ads are like, learn to sell stuff on Amazon, except there's 10 gazillion people trying to sell the same crap on Amazon. What I'm trying to do here is inventory management. I sell premium, I manage risk. I sell premium, I manage risk. I just take the positions and I continually, the moment I close something, I open something else. The moment I close something profitably, I open something else. But at the same time, okay, I've been around the block a few times. I know that sooner or later, okay, hell cometh in this marketplace, and it could be to the upside or the downside. That is what the hedges are for, because when they bring the pain, you're going to have a risk defined area. Okay. Ultimately, what happens if this marketplace just starts to, you know what, just starts to crater? In fact, I'm even going to change the color so you can see this, right? The market just starts to come down. You know what? You had that VIX volatility spread on. What it's going to do, VIX volatility spread is going to explode in value. It gives you more than enough time to mitigate risk. So the marketplace is crashing and the VIX volatility spreads comes to life and it goes, I got you, I got you. And what are you able to do? Okay. Weather the storm beautifully on these positions. But on the flip side, what if we rally huge? This is actually what a gamma iron condor does. What's a gamma iron condor? A gamma iron condor, the risk graph, okay, actually looks something like this, where the gamma iron condor will actually lose a little bit of money in here and puffs up if we rally or sell off big. That's a huge risk graph in there. I put a gigantic risk graph on top of another risk graph. The gamma iron is actually designed, as what we term an inside hedge. And if we come screaming higher, it puffs up and covers you on several of these calls. If you can't mitigate risk, you don't stand a chance in this business. We are going to sell options till our heart's content, but without the hedges, okay, we don't stand a chance. And it's one of the most critical things. And by the way, everybody loves to ask me, what does it cost for you to put the hedges on? I think it's only fair to go into the product called the Vix, okay, and show you my trades. These are Vix Volatility Spreads. Look, there they are. Put on for a 5-cent credit, put on for a 3-cent credit, put on for nothing, for nothing, for nothing. They have risk, but I'm putting the trades on. I'm not paying for them up front because everybody asks me, what's the cost of hedging? That hedge is not going to cost me anything. Could I lose a little bit on it? Sure. But think about all the premium I'm collecting. But this, okay, this is protecting me. That's what this business is about, okay? I'm telling you right now, this is why you want to sell premium. I mean, the number one thing that, I threw this down here and highlighted, I said, you need this in your life. And I can't stress that statement enough that, oh yeah, you need this in your life. It's easy enough for me to say it. People, I can't handicap the next 10 minutes of this marketplace. It's just going up. It's just going up, yeah, until it doesn't. The whole market right now is predicated like on what? On Tesla, okay? Tesla's driving the market. Go look at it. Don't take my word for it. Go look at what's going on in markets, okay? Like when I say go look at what's going on in markets, no. I mean like right now. Go look, okay? What do you got up today? Oh, the S&P's up 25, okay? What are the financials doing? Absolutely nothing. What is energy doing? Oh, it's up mildly. Oh, what's Amazon? Oh, that's down. Oh, Facebook is down. Oh, Google is down. So what's up? Oh, Tesla, okay? It's all Tesla. Oh, a little bit of Microsoft too, right? That's it. It's the world according to Elon Musk. You willing to bet your life savings on Elon Musk? Okay. I mean, you think about that for a second. You're like, yes. Okay. Except that he himself is actually selling a stock, which should probably worry you a little bit. Listen, can't handicap stuff. You're just going to learn to sell some premium. Okay. Hopefully the markets stay wildly like volatile in the next decade. Premium though can now be sold. Okay. And this is why you want to sell premium. It could be sold in a very small account. You can have $2,000. Now, $2,000 in the account, they even lowered the threshold. Produces positive theta decay, can enhance existing positions. If you say to me, I don't need this. I own stock. I don't need this, okay? Provides a really high probability of success. You never need to buy or sell the stock. And you can be wrong on market direction and still produce profitable trades. This is not about market direction. These, okay, are the instances of why you need this in your life. And selling premium can potentially bring in consistent returns, okay, while actually minimizing your risk. And if you want to learn to do this the right way, we're going to talk in just a moment about criteria. Before I get there, I'm just going to rip through this quick. I'm going to show you a couple of live trading examples, right? When I say live trading examples, and I want to reiterate this, like when I say, all right, I'm going to show you some live trading examples. These live trading examples, this is the portfolio that I use here at TheoTrade, okay? Ultimately, every trade that I'm showing you right now, okay, has been done live at TheoTrade. Every client of TheoTrade can see it, right? Variations of all of the following trades can be done with as little as $2,000 in a funded brokerage account. And these trades absolutely can be done now in retirement accounts. So I'm going to show you what I've done year to date. By the way, I only show you up until like the previous month. I'll show you to the end of October, for instance. I don't think it's fair to start November yet because, well, we're still in November. But this is exactly a year ago. Just to give you a quick feel, like what are you actually looking at? I started with the trade on Tesla because I thought it was kind of fun. I just use this by the way, I'm just using this one to explain. These are premium sales, okay? And here is all the way back last year, right? 11/30. And when I exited, this is the exact time and date I opened it, exact time and date I closed it. This is the opening trade, the closing trade. Now, if you look at this, it's the call that I traded. It is a call. This is the exact price I opened the position, the exact price I closed the position. You're like, where is that coming from? All this is, okay, I'm actually going to show you exactly what this is. Right? This is, here, let's show you 360 days of activity in Tesla. So I trade. I don't trade that much Tesla, but I trade. Okay. So let's actually show you the exact trade that I'm talking about here. You can see every opening transaction. Okay. Every closing transaction. So in effect, I'm showing you like literally, I sold the 950 call, then I closed the 950 call. Okay. Then I sold this one to open and I bought this one. Like all I'm doing here is this is a copy and paste directly from Thinkorswim. Just so you guys know, I am no holds barred. I will show you every nuance, every aspect of my account, profit, loss, everything. Okay. I just wanted to show you what this looked like. Okay, now we're actually going to do a year in review, and I'm going to fly through this because there are literally like 100 trades in here, and I don't want to drive you crazy. Here's another one on Tesla. Okay, so here's one on Tesla, here's one on Tesla, 90% return. Here's one on Tesla, 58% return. Okay, starting exactly in the beginning of this year, we launched what we termed the TheoTrade portfolio. What a TheoTrade portfolio is, it's a premium selling portfolio. Okay, this is a premium selling portfolio that literally anybody and everybody could participate in. I just used the Tesla trades to show off like, oh, you can sell premium even in Tesla over here. Push those aside. This is where the TheoTrade portfolio really kicked off. This is a bond short put. Now, not everybody here knows what a bond is, but whatever, I like to trade the bond. So as I said, it's no hold barred. And I sold this 14 ticks, bought it back for 6 ticks, a 57% return. 53% return, IWM short call. So you're learning really fast. I trade bonds, which is the ZB. I trade IWM, 62% return, 53% return, 76% return. SPY, now I'm onto the SPY, 60% return, 50% return, 51%. 57%, 49%, 50%. Okay, QQQ short call, 62%, 53%. By the way, now we're on to the Qs. So what have you seen? We've seen bonds, we've seen IWM, we've seen spiders, and we've seen Qs. 50% return in here, 50% return, 64%, 53%, 57%, 56%. We're back to IWM. Short call, 50%, 54%, 19% loss. By the way, I show you win, loss, everything. This particular loser, that was one, okay? One of only a handful of losses that have taken the entire year. Premium selling, again, has been phenomenal. 54% QQQ, 52%, 49%, 47%, 49%, 51%. Bond short call, 50%, 54%, 51%, 50%. SPY short call, 50%, 53%. We're back to bonds over here. By the way, have you seen anything? I threw a couple Teslas in there just for the hell of it. But for the most part, I'm IWM, I'm spiders, I'm QQQ. Sometimes I like the bonds because that's me. I like the bonds, right? Right? IWM, more IWM, more IWM. You notice anything interesting about the returns over here? Apparently, I like the 50% number. Oh, look, that one I made 73%. Yeah, the bonds jumped. I actually remember that one. This one, bonds, more bonds, IWM, 50%, 51%, 53%, 50%, 50%. Okay. A little more. Oh, look at this one. Amazon, 63%, QQQ, 50%, 51%, 50%, 55%, 51%. Are you guys bored yet? 50%? Good, because we're only in May. 50%. Oh, here's the point right there. Look, after about 6 months of premium selling, I switched. I moved into the ES. What's the /ES? It's the options on futures contracts. At this point, okay, so I started this premium selling portfolio here at TheoTrade, and I said, we're going to scale over time just to get everybody comfortable. So at this point, you're through almost 6 months, and I decided to scale because one S&P options on futures is worth 5 contracts in the spiders. And I scaled up with saving everybody on commissions, because if you traded 5 contracts in the spiders, well, it's 5 contracts in the spiders, it would cost you a lot more. So to save them on commissions, I moved to the ES and a 50%. So here we are, short call 50%, 51% QQQ, short put 50%, ES short call. Again, options and futures are wonderful. Bond short call 53%, okay, bond short call 54%. And remember, what I do is I'll periodically, okay, start to step things up in this portfolio. So now we're into this thing, it's all the way into like August, QQQ 56%, QQQ over here 31%. As I said, I start to step things up. This is what we call a Christmas tree spread. It's one of the more powerful strategies we have over here. This is actually a $20.99 credit closed for a $3.12 debit. It's an 85% return. It's a very different trade, but it absolutely unequivocally is a premium selling position. This one unit makes almost $2,000 for like literally one unit. All right, QQQ short call 57%, 53%. By the way, it's TLT. It's another form of the bonds. ES short call, ES 19%. Again, not everything is going to be stellar. Not everything works out your direction. Okay. ES short call 57%, 50%, 54%, 50%, 52%, 49%. You guys getting bored yet? 63%. And again, here's a 92% return on another Christmas tree trade. The way I had to break the second portion up into a back ratio and a customized spread. Here's again, huge credit. All right, there's the debit to get out of it. Listen, what better time? By the way, that's the last trade that I'm showing you getting out of. That is the portfolio. Okay, pretty much up until the end of the October timeframe. I hadn't closed anything after October 22nd. I'm now closing some trades here in the November timeframe. I'll show you November as soon as we're through November. Nevertheless, that's the Christmas tree trade. Again, another powerful trade. I have another one of those Christmas trees on as we speak. This is a great time. It's a great time to learn the skill set because most people these days, not everybody, but most people are actually working from home, right? If you're still quarantined, this is a great way to emerge stronger and in great financial shape. I'm not sure too many people are quarantined, but I say that. And then again, I get some emails from individuals that are down like in Australia and they're still, just hanging out and so forth. Okay. If you're still working, do this part-time, you work. Most people are actually working off the side of the desk and trading at the exact same time. I mean, that's what's creating this kind of edge. What our members are saying. This one comes September, Kevin Burks. I absolutely love this freaking website, TheoTrade. Okay, this is actually from our chat room here at TheoTrade. There's so much here, so many different flavors. I cannot pull away for more than 15 minutes. I cannot get any work done. I love that. I could go on, but here comes the short that I'm waiting on. Anyway, I just threw these, Stefan was saying, I really think that Theo is the best educational money I ever spent. And Marianne, I'm with you, Dom K. Those trades make money. It's good. I mean, again, I just threw this in here, what some of our members are saying. Onward over here. The trades that I'm showing you today, these are pretty hands-off. Like all these trades that I just ran through. And again, I wanted to give you a feel, not just of a portfolio. It's not fair also to cherry pick trades. I give you every single trade that I've done in the TheoTrade portfolio. When I say every single trade, like this is also, it's broken into a spreadsheet. All right. When I mean like broken into a spreadsheet, okay, I can literally show you every single trade, okay, that we've done. Every single trade, okay, year to date is in this portfolio. You can go back and reconcile them, and it couldn't be a more simple, like, look, I sold. Everything's sold. And then we ultimately have all the closing trades, all of them bought back in here. But I figured I'd just throw that in there ultimately so you can see, okay, I mean, that's premium selling. It's not that hands-on. And these types of trades, okay, the results for perfect for part-timers, we're actually texting trades out to individuals using push notifications. You don't have to sit there all day, looking and staring at the screen. It's hands-off. And most of this actually uses what we term GTC, which is good till canceled orders. So even a fraction of your time is enough to see spectacular results. Now, here's some characteristics of selling Ultima Premium, right? The attributes are undeniable because you never have to buy or sell the stock. The risk can be really fine-tuned, tailored, if you will, to your comfort level. That's what the hedges are about. You're never going to use a stop order, okay? You can actually vary your time frames and minimize risks. The probability of profit's incredibly high. I'm going to tell you right now, in selling premium, okay, 95% of the time, you will do absolutely nothing. We will show you how to structure hedges. We will show you what premium to sell. How do we do that? Okay. We just walk you through, okay, each of these nuances. How do you sell options? Good. How do you put the hedges on? Great. But on top of that, we actually send trades. Why? Because everybody needs, okay, something to look at. Everybody needs explanations, all right, in some detail out there. It's incredibly and critically important for you to have watched someone do this and not just be, oh, I'm left to my own devices. It's an excellent tool, okay, for those seeking returns to build an account, but it's also a great tool. You can use this to enhance one stock's portfolio and new products. And I'm going to reiterate this time and again, allow for the sale of options in literally any account size, $2,000 now, and you can do this, right? I'm building a portfolio of options. That's the aspect that gets a lot of people. I think some people saw what I did. And I sold some of these and I sold some of these and I bought a couple of there. And they think to themselves, I don't know if I can do this. Listen, you can't let the options portion of this intimidate you because you're going to need this for the foreseeable future. Selling premium can be done for really minimal credits. You don't have to be like really hands-on. You just go out there and sell a couple premium, little premium until you feel comfortable. Build it up over time. But for those of you that are a little bit more, up the learning curve and up the food chain, okay, you're going to learn real quick. It's going to take you completely new levels. However, sale of premium is also like, this is akin to a massive power saw. And I always say this about options. Options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market. But if you don't know how to use options correctly, you can lop off a couple of fingers, right? You can sell Ultima premium. You can minimize risk. And again, you don't have any options experience, that's fine. Just don't let that options portion of it intimidate, anybody in here, because you're going to need this for the foreseeable market future. And we can show you how and when to do this. And it does take a couple of hours. But what we do here at TheoTrade is we create detailed recipes for every strategy, including selling Ultima premium, right? And when I say detailed recipes, what I'm talking about is, you wouldn't bake a cake. Some of you could probably bake a cake without a recipe, but that's only because you've done it a couple times before, or you grew up baking a cake and you knew how to do it, right? I'm telling you right now, if you're given a very complete, a very definitive recipe to be able to go out and sell premium. When I say definitive recipe, step one, where do you even start? Where do you even start? What candidates do you use? Step two, what kind of volatility? You have to know, right? That criteria, you have to know what's in the recipe. This specifically is what you need to know to successfully sell Ultima premium for a living. What underlines? And again, when I talk about like a recipe, you're like, oh, I don't really get what you're saying. This is what I'm saying. We'll actually tell you what underlying stocks or indices make the best Ultima premium selling candidates. I'm going to go out on a limb over here. Did you see what candidates I used? QQQ, IWM, spiders, S&P options on futures. I don't even know those. Okay, bonds. Am I making it easy enough for you? All right, a couple other things. All right, so yeah, you can do that. But then you look at this and go, what volatility should I seek out? At any given time, if volatility gets too high in one of those index products or too low, did you notice that I went sequentially? I went after IWM, and all of a sudden, boom, spider. There is something specific that I'm looking for in volatility because it gives you more edge at certain times. It's not just like randomly QQQ, IWM, Q, IWM, QQQ, spiders, okay? It's specific. It's about volatility. Next, what options expiration do I select? Now, this is a big one. This is a real big one because when you start to look at options, forget about Tesla for a second. Let's pull up the mother of all products, okay? This is the Widowmaker. This is the SPX. There's 1 day, 2 day, 3 day, 8 day, 10 day, 17 day. Look at all the options in here. You know that you have to pinpoint exactly what expiration. You can't be off by a couple of days. You need to know exactly what expiration do I select, okay? What should be the delta of the option I sell? Delta. You're like, I don't even know what delta is. Delta is the rate of change of the option for every dollar move in the stock, but who cares what the marquee definition? Delta also keys into probability. We're going to actually tell you exactly what delta. We'll tell you what expiration, what the volatility should be, what delta should be, okay? Exactly what products you should trade. What's left to your own devices other than hitting confirm and send, right? We'll actually tell you what options do you buy against your position. You know what? When I put this in here, I go, what options do I buy against my position? What does that mean? It means the hedges, people, the hedges. Without a Vix Volatility Spread, without your risk mitigation tools, you're a sitting duck. No one can survive a fast-moving market. No one, regardless of experience. If you do not hedge, okay, you will die in this business. You will die. If you sell options premium, you don't hedge. You ask anybody that has sold options premium, okay, they go, oh, I was either too big, I didn't hedge, and I just puked my positions. You got to learn how to build the position. You got to learn how to build the position right. Do I need a large amount of money and capital in my account to do this? Absolutely not. And I keep reiterating this, $2,000. What's the right amount of risk for me? We can actually fine tune. You say I have a $10,000 account, okay? How much risk should I have on? How much risk can I have on? We actually have an entire allocation, okay? Like literally an allocation model that walks you through how much capital should I allocate per what the size of the account is. What are the percentage returns supposed to be? Well, I don't know, maybe 50%. It's one of the things I talked about. How do I protect myself from market crashes? This is the hedges when selling options. You have to protect yourself. Let me show you exactly what we do here at TheoTrade. TheoTrade, again, creates recipes in trading. What you're going to learn is trading is all about answering the what ifs. When I say what if, what might be a good stock or ETF candidate for you to sell premium? What's the correct options expiration cycle? How much capital do I commit? What strike price options do I sell? What strike price options do I buy? How do I hedge? How can I limit the overall risk? We have those answers. We build definitive, okay, criteria, checklists for each strategy and each unique variable you're going to encounter. When I talk about like different variables and when I talk about checklists, let me give you the whole entire construct here. I traveled around a lot early in my career. I traveled around a lot for Thinkorswim, traveled around a lot for TD Ameritrade, and I sat on a lot of aircraft. And I say aircraft, I got on a lot of airplanes. I'm still going to get on a lot of airplanes. I live on an island right now. So I'm actually hopping on an airplane Saturday. Oh, I'm so excited. All right, we're getting off the island. But the idea of a checklist, okay, it comes from the idea of a pilot. They get behind, or I should say, they get behind the, the yoke in a 737, okay? But nobody hops into a 737 and just throttles up and takes off. I mean, these pilots, they go through highly detailed and structured checklists, like literally like, step number 1, step number 2. You ever watch a pilot and they walk around the aircraft and they're like pulling on the engines? That always makes me feel like warm and fuzzy, especially in Chicago in the winter when they're like pulling on the engines. It's like -7 degrees out there. They're checklist people. They go through a pre-flight checklist. It goes through what? Unique variables, things that they're supposed to look for. But then even more importantly, they get the plane in the air. What happens when the plane's in the air? 95% of the time, absolutely nothing happens. And 5% of the time, what do? They have to manage an issue. And managing an issue is going through variable. What if the stock goes up? What if the stock goes down? What if a dividend is coming? What if expiration is coming? What do I do if we crash, if we rally, if this, if this, if this? Imagine we had a little flow chart. What do I do if we go up? What if I could do if we go down? Okay, 95% of the time, you're going to be fine. Okay, but you got to understand that trading, it's all about answering the what ifs. Okay, TheoTrade has the answer and is the answer to those questions. We'll give you the right probability for the trade. We'll give you how many option contracts for your account size. When do you close the premium sale? Okay, what if the stock sells off big? Do you bail out of the trade? What if we rally massively? Can I fix a losing position? All right. We give you the how, the when, the why, at what price. And I'm telling you right now, people, that is just the beginning of the variables that you're going to face while selling Ultima premium for a living. Listen, you can go Google right now what selling Ultima premium is. Serious, you can go Google that right now. Maybe you even sold some premium, or maybe you even know how to build a few trades, okay? That's not what this is about. This is not about selling premium, okay? This is about a recipe for success. This is about TheoTrade's recipe for success. This is 20 plus years of trading experience. That's just me. By the way, here at TheoTrade, we're not a one-trick pony, okay? There are 7 other full-time instructors, one of which is a professor of finance at Loyola on the side and kind of moonlights with us here at TheoTrade. We had access to client order flow for over 15 years and have viewed and studied millions of trading accounts. I specifically ran education 15 years. Both Thinkorswim and TD Ameritrade, which is a firm, we had the largest options order flow in the industry, bar none. That's where the criteria comes from. That's what the design of the checklist, okay? It's not just our trades. It's not just me going out there, trial and error of what works. It's watching and studying millions of clients. Criteria is the recipe for success. The following strategy and corresponding criteria requires the utmost attention to detail. I mean, this course, Ultima, spent years, literally years, fine-tuning it. The trade setup, the criteria. When you approach the section on criteria, you follow the steps to be able to build a trade. We built a full-blown 5-hour course on this, okay? I am the trade instructor. It's the Ultima Income Generator course. Now, okay, people tune into this and they always go, oh, here it is, it's $500 class, okay? hold that thought for a second, because it's not a $500 class. We here at TheoTrade no longer go out and sell individual classes. Okay. We haven't done that in years. That's not what we're about. That's not ever what we're going to be about. You know, a lot of people realize they go out there and they take a $500 class. I mean, there are so many classes out there too. I mean, people literally, they go out there and they take a $500 class, and then they have to buy a $500 indicator for the $500 class. But the best part of the $500 indicator is they have to pay $500 to learn how to use the indicator for the original class. Before you know it, all this is obsolete. But wait, there's more. Then there's another $500 indicator or another $500 class. It's ridiculous. Okay, it's not what we do here at TheoTrade. Before I even explain what the class is, I tell everybody right now, we will give you absolutely everything. Okay, pretty much soup to nuts for you to actually learn this. Okay, everything. And I'm going to show you exactly what everything entails here momentarily. Okay, just to give you an idea what everything includes, you want to email me and bounce specific trade ideas off of me. When I say specific trades, you can literally email us and say, am I doing this trade correctly? We'll get right back to you. No problem. Okay, so how come nobody else does that? Most people don't really understand this business. I spent 15 years. I've had every brokerage license you can imagine. I've had my Series 4, which is my options principal. Wait, I had a Series 3, which is actually my futures regulatory approval. So I had a Series 3, a Series 4, I had a Series 7, which is a what? Just a regular broker dealer. Then I had my Series 24, which is a principal broker dealer. But wait, there's more. I had a Series 66, which is a 63 and a 65 combined, which is a registered investment advisor, because I managed over $300 million early on in my career. All of it is for nothing, but I do know how to answer your questions and trade related questions. And I've got no problem with that, nor do the 7 other full-time instructors here. Okay. The Ultimate Income Generator course. I am the trade instructor for this one. This is a course that we put together just a couple of months ago. It is in a can, it is ready to go. What that basically means is you can stream it starting right now. We like to do that. We like to do that simply because we take the class, okay, we film it live, and then we actually cut it, refine it, make it nice and perfect, and then we stream it to you, okay? The 5-hour course, it is archived. It's available immediately for streaming 24/7. Now, you can stream, okay, off of the TheoTrade website, but you can also stream, okay, to any mobile device. So if you want to stream to an iPad or an Android, okay, or your phone, you can actually stream the course to your phone. We have our own mobile application that we built here. So we have a TheoTrade iOS and a TheoTrade Android application. The class includes a slide deck. That slide deck, all right, is available immediately. Right now, you can download it and you can actually go through the checklist. We actually have a quick start guide too that I'll explain to you for those of you that are experienced. But I implore you, spend the 5 hours, go through the class. It's going to be worth your while. Now, some people are like, I'm so brand new to this. I'm intimidated. I don't even know where to start. Okay. What we do here at TheoTrade is very, very unique. By the way, this is TheoTrade. So a little view of the site, but this is TheoTrade. We have a start here menu. Okay. What's start here? Options 101, options 201. We just give you access to that. We're going to give you access to a huge amount. So before everybody looks at this, and a lot of people do, they look at the $500 and they go, that's it, I'm done, I'm dropping off. Okay, I'm telling you, don't, because you're going to be shocked at what we do here. Number one, we're going to be shocked at what we do here at TheoTrade, but number two, what we actually include. TheoTrade is all encompassing. We don't go out there and nickel and dime people, all right? We have one product, okay? And that product provides everything that you're ever going to need to trade, to invest. If you're going to be in this business, we would give you every, okay, critical support detail that you're going to need to succeed. And that's exactly what I'm going to show you in here. So here's the curriculum for the course, and then I want to explain a little bit more about TheoTrade. The Ultima Income Generator course, right? You're going to learn, obviously, to generate consistent returns with this selling options curriculum. How to build a portfolio of high probability trades that generates consistent monthly returns, regardless of your starting capital. I don't even want to hear about the capital because there's a what about margin? Okay. The second, you're going to get detailed entry and exit criteria for selling options premium while keeping risk at a minimum. Okay. The third point, discover option Greeks. You're going to learn how to manage your positions through one easy number. You're not going to have to sit here and go, I sold this and I sold this and I sold this. What if we could just teach you to like, oh, look, I'm fine. I sold this, but I'm actually going to manage your Greeks. You're going to learn to use a risk array. What a risk array does, it gives you a visualization. It gives you foresight to the marketplace. You ever wonder, how much am I going to make or lose if the market goes up or down, or up big or down big? The risk array will teach you exactly how to use that, how to allocate properly to reduce risk. Allocation matters. Reduce risk and minimize, okay, the risk of the portfolio. Really hands off. You're going to discover risk mitigation techniques. These are the hedges to actually reduce risk in some of the most extreme market environments. You're not going to get caught off guard. You're going to wake up one day and this marketplace is just going to get pummeled, okay? You're not going to get caught off guard by that. You're going to learn how to sell premium in small accounts or retirement accounts. If you have a retirement account, you can sell premium in a retirement account. Everybody goes, my brokerage firm doesn't allow this. Okay, they do. The brokerage firms have changed the rules. Most people do not know that. Not every brokerage firm agrees with that, but there's innovative new trading vehicles that have never been available before. Listen, before I go further, I also tell everybody this, TheoTrade, we make it a completely riskless trade, right? I mean, the first thing you got to realize is, listen, we want people to come to TheoTrade, right, that want to be here. And we provide you every, as I said, every critical support feature and every little nuance that you're going to need to survive in this business and then, okay, ultimately excel in the business. There's a money back guarantee. And we just say this, if you're not satisfied in the next 90 days, email support@theotrade.com, receive a full refund. There's no stipulations. We don't do any of that crap. Do a little dance, make a little love, get down tonight. We don't do that. Listen, there's no stipulations. You sign up. If you don't like us anytime in the next 90 days, okay, there's no stipulations whatsoever. There's no excuses. There's no questions. You don't have to give us commentary. Just email us, please. Just ask for your money back. I implore you to understand, we only want you here, okay, if you want to be here. We have 6,000 people that are on the TheoTrade site. We don't even do membership anymore. When I say membership, like if you want to be at TheoTrade, okay, you have to pay for 3 months. That's it. You pay for 3 months. And if you want to do it again, you got to pay for another 3 months. We just ask you at the end of 3 months. So if you go right now, and you can actually follow me over here, theotrade.com/skew. It's S as in Sam, K as in kick, E as in echo, W, theotrade.com/skew. I say, you know, I'll go over there, follow me over there right now. Okay. And the reason I say that is, look, right, the Ultima income generator class explains everything on here, and you guys can kind of look through it. You just click add to cart. The reason I'm actually clicking this right now, I'm going to show you. When you click add to cart, okay, you can pay us, you know, upfront, 2 payments, 3 payments, it's fine. Like, but in here, put a phone number in, and we'll actually send you text messages when we trade. It's not a lot of text messages, just letting you guys know. And also, I want to reiterate, is a completely riskless trade. Like 30 days, okay, 90 days. You have 90 days, right? And anytime in the next 90 days, if you're not, you know, thrilled with what you're seeing here, just ask for your money back. And just, again, here's the email address. You don't even have to, you know, call the phone number or anything like that. So just letting everybody know. And again, you can go to theotrade.com/skew to enroll for it right now. With that, okay, because one of the things I haven't explained, and again, I'm reading some of your questions. I'm going to tell you guys right now a little bit about TheoTrade, okay, and everything that you get in this particular package. And then I'm going to answer some of your specific questions. And again, I'm kind of reading your specific questions off of my mobile device right now. So it's important that you guys know that, again, we're going to hit every question we possibly can over here. So, you know, as you guys are enrolling for it, let me explain everything that comes in TheoTrade. We say you want a bonus. I don't even call this a bonus, okay? You just got to understand that TheoTrade, we go beyond one class or one indicator. I have been around in trading, you know, since I'm basically 22, and I started running education for Thinkorswim at the age of 24. I've seen every educational program out there. And I'm going to tell you right now, I've seen education programs, you could pay $30,000 and it'll pale in comparison to what we offer here. We will give you everything you need. Like, we get it. You want everything to trade. You want everything to invest. You want it at one place and you want it at one price. Okay. Here's the first kind of bonus of the day. This first bonus of the day, there's a brand new class. It's coming this Thursday. What do you mean Thursday? This Thursday. It's live November 18th. Blake Young, Who's Blake Young? Blake actually worked for Thinkorswim and TD Ameritrade as well. Okay. Blake is a little bit more of a market technician than am I. He's actually going to be doing the candlestick trend trading system. It's a 3-hour course. It's going to be archived immediately. If you cannot make this class live, by the way, I encourage you, make it to the class live. The classes live are awesome. I mean, seriously, there's like, it's, if you want to see what the class live looks like, okay, the TheoTrade site, this is the chat room right now, right? So you're chatting in there, and we're actually in between. We're literally in between instructors right now. So there's another instructor coming on right at the top of the hour here, but we do our little 2-minute break over here. But this is TheoTrade. The class will be up here, and you can see all of the instructors. By the way, the instructors are highlighted here. Clients are actually down below, right? And right over here, it says new TheoTrade class. You can see we're advertising our own class, right? If you have access to TheoTrade, you have access to the class. All right, I'm going to close that up there for a second. That class is coming on November 18th. It's this Thursday. Oh, it's short notice over here. It's fine, because if you can't make it live, if you can make it live, phenomenal. But if you can't make it live, okay, archive immediately. And you can actually also download the archive. You can download the archive. You could be watching the archive, all right, from an aircraft over here. We actually allow download capability, which again, I think is kind of cool. That is one of the first kind of bonuses in here. By the way, the candlestick trend trading system. So not only are you getting, Ultima premium selling, you're also getting the candlestick trend trading system curriculum. You're going to identify a trend as little as 2 candles, find candle patterns, high probabilities of success, giving you edge day to day. This isn't always for everybody, okay? But again, we continue to push the edge of the envelope, and I'll explain what that means here. Number 3, understand candle basics and how to incorporate patterns for improving results. Find and change of power between bulls and bears in 2 to 3 candles. View tick charts and confirm balance and trend. Learn to read trend without indicators on any time frame. I'm telling you, Blake Young, he's kind of our newest acquisition here. Blake has been with us now just over 3 years, just over 3 years. You guys are absolutely going to love Blake Young. I mean, he was a great grab for me when he finally exited Thinkorswim and TD Ameritrade. So we were kind of his first phone call out there. So anyway, Blake will be doing the candlestick trend trading system, November 18th, 9 a.m. to 12 p.m. Central Time. And I put a lot of weight into it because this guy's great. You guys are going to love this class. All right, the first more traditional bonus. Okay, when I say bonus, this is everything that's included inside of TheoTrade. Quick Start Beginner's Guide. If you've never put on a trade before, okay, this is actually my training. I put this together. It'll take you from complete newbie to entering your first trade. I displayed this a little bit earlier, but this is like options 101, options 201, okay, options 301, like volatility, skew, and U. Then we get into like order execution, part 1, 2, and 3. Listen, no matter how experienced you are in this business, I spent 15 years in the brokerage world. I'll teach you everything about order execution, okay? That 3-part session, order execution, part 1, 2, and 3, okay, that'll save you thousands of dollars. Like, you're going to learn every nuance of trying to get better fills. Like, that's what order execution is about. It's not about hitting confirm and send, okay? It's about knowing how the trades, okay, are routed. Like, I will tell you the whole path from everything from you hitting confirm and send in your screen to the path of the trade going from here to, just outside of Dallas, Texas. Then it actually confirms up in Chicago with Citadel, then hits the floor of major exchange, and the message pings back. Every nuance of getting filled. I'm telling you guys, you're going to love what we do over here. So the Quick Start Beginner's Guide, bonus number 2, we give you access to everything that we've done, okay, in 6 years here at TheoTrade. TheoTrade officially launched in 2016. Remember, I only left TD Ameritrade in 2015. We launched TheoTrade January of 2016. We are now 6 years, okay, of doing this. In 6 years, we give you access to every single class we've done over the last 6 years. As I said to you guys early on, you're like, oh, this is no holds barred. Now you're going to see what I mean, okay? We do the Ultimate Income Generator class. You get access to that, right? You get in-out spreads class, surviving and thriving extreme volatility. Get the volatility back spreads class, in-out spreads. That's the black book spread class, how to collect income being short. We have a class in the risk twist spread. That is one of the most prolific classes we ever did, the risk twist class. Guide to selling high probability spreads. Okay, day trading NASDAQ futures. We don't pigeonhole. Okay, this is every genre of trade. We're not just premium sellers, just option geeks. We teach you how to trade futures. We got people that just trade futures. We have individuals, okay, that are out there trading currencies. We got individuals that are now even into crypto markets, right? You name it, we actually have it. And that's one of the keys here, TheoTrade, is you don't want just to learn what I've, listen, some of you guys are going to want to go out there and trade throughout the course of the day. So we do offer some day trading classes, pairs trading, the final frontier, and a ton more. Again, when it comes to classes, let me just show you what it looks like here. All right. This is the TheoTrade class archive. Classes are option classes, option newbies, technical analysis. We have some of the most foremost experts in technical analysis. That's charts, people, day trading, stock trading, bonds, pairs trading. We even have mindset. Okay, we have an in-house psychologist for this. Click right over here. Okay. My area of expertise, I'm the options geek here. So I've done 2 recent classes, Income Accelerator class. You know how long that class has been around? 2 weeks. Okay, and the Ultimate Income Generator. We have Gamma Iron class, Controlling Your Risk, Back Spreads, Volatility Crash Course. I'm telling you right now, you get access to every one of these. Okay, to show you when I said, oh, this class is only 2 weeks old, right? There you go, October 19th. It's more than that, man. I'm just losing days of my life over here. Okay, Income Accelerator, but you get to see what the class looks like. You get to click to download the slide deck over here. All right, you guys are telling you, you're going to love what we do here at TheoTrade. We give you access to every one of the classes from day one. Bonus number 3, all access, okay, VIP pass to TheoTrade Live. And what that is, it's our live trading room. So we will broadcast our trading screens for over 6 hours a day. We do all of our traders, and we literally have 8 full-time instructors. We provide real-time trade ideas, real-time market insights. We're talking you through trades, allowing you to ask questions. We do text and push notifications. We have 5 different trading portfolios. We have daily coaching sessions. Just to give you an idea what a coaching session is, it's continued education, all right? The coaching session is continued education, where we actually have a professor in finance, okay? His name is Jeff Bierman. I'll introduce him momentarily. And our instructors directly answer your trading questions via email. One of the things I put a lot of weight into here at TheoTrade, if you go out there and you can spend $30,000 and most people are not even going to answer an email. Our instructors, okay, for a few $100, they're going to answer your trading questions via email, right? Like literally, well, you think that's not going to save you a couple $1,000s? One day you're going to need that. One day you're actually going to need like, hey, what happens if I need somebody to talk to, someone needing an idea to bounce off of? You can't call the brokerage firms anymore. Nobody picks up the phone at TD Ameritrade. It takes an hour and a half. You can't call, Interactive Brokers? They never picked up the phone in their life. They have no idea. We're giving you that. You can bounce ideas off of us. That's what's so critical here of what we do at TheoTrade. And I'm so adamant about that because people, they don't put enough, okay? I'm telling you right now, oh man, they don't put enough into this, okay? Into the fact that you can actually bounce questions off of, right? And I stress to you guys, when you look at our site, you're like, oh my gosh, there's so much stuff in there. Where do I start? Email us. Why wouldn't you? People look at this and they try to like, hey man, what classes should I go to first? I don't want you to be intimidated, okay? I don't want you to go in here and say like, I'm not sure exactly where to start. Shoot us an email. Why not? Okay, whatever, there's 1,000+ people on today. We may have, 200 people sign up for TheoTrade. It's fine. Every one of you could email us and say, this is what I want to do. This is where I want to start. I'll actually just link you exactly what classes maybe that'll interest you. Because I'm doing this a while and I built a couple of the classes here, and Jeff Bierman built some of the classes here, and Blake Young did, Tony Rago. Okay. So we know exactly where to go. So please email us. Like, I encourage people to do that. It's the lifeblood of what we do. Like, we learn from you. We learn from you emailing us. We actually learn not only, what interests you, but we learn what classes are coming next and so forth, just simply from emails. So you get access to 3 months of our live trading room. You get access to all the courses. Okay. That's what we do here. All right. Here's the TheoTrade instructors, Jeff Bierman. So Jeff Bierman is also a professor of finance. You can pay $40 some odd thousand to see Jeff Bierman. at Loyola in Chicago, or you can come here for a couple $100 at TheoTrade, and you can still bounce, questions and emails. Matt Williamson, a market neutral premium selling strategist. Corey Rosenblum, he's our senior strategist and resident swing trader. I just want to show you something. Jeff Bierman here also carries the designation of CMT. Corey Rosenblum carries the designation of CMT, and Brandon Chapman. We have 3 CMTs on our crew. I'm serious about this. You check this out. Most major brokerage houses in the US do not have 3 CMTs on their crew. I told you, you just can't find a crew like this anywhere else. Because when we left Thinkorswim and TD Ameritrade, I ran the entire education division. At one point, we had 768 individuals in our organization. We took the absolute top of them. All right. Jeff Bierman worked directly with me at at Thinkorswim TD Ameritrade. Brandon Chapman was there. Okay. Steve Miller, I actually knew since I'm a kid. Blake Young worked over there. It's phenomenal. So Brandon Chapman, CMT, macroeconomics, technicals, fundamentals. Brandon actually wrote all the course manuals for TD Ameritrade on their education. Okay. Note, okay, some of the educational classes at TD Ameritrade would cost as much as $24,000 for an 18-month program. Brandon's the guy that actually wrote the manuals. Come to Steve, Slim Miller, 43-year veteran stock options and futures trader. Steve is also our resident in-house psychologist. He's got a class that I'm going to show you here momentarily. Remember his name, Tony Rago. All Tony does all day long is he trades NASDAQ futures, just scalps NASDAQ futures throughout the course of the day. Buys and sells them throughout the course of the entire day. Last but not least, Blake Young, market profile, futures, currency, and commodity trader. Blake is who is doing the class this Thursday. You guys are going to love these guys. By the way, this is all of us working from home on Zoom. He doesn't look like he's working from home. Okay, everybody else, that's Blake. How scary is he? Very, very scary. All right, we give you access to 59 proprietary indicators and scans. Anything that we build here, when I say anything we build here, anything that we build here, and I'm looking at some of the questions because I'm going to answer them directly here in a moment. Anything we build here in terms of scans and indicators, we give them to you. Why do we do that? You just can't charge more for this stuff. Every single day I use Quantix. Every single day I use Quantix. You should too. Okay, you should use Quantix. NQ levels, next generation squeeze indicator, complex position tracker. I just want you to know, if you see anything on my chart, okay, like this, like these lines, this is, SPX and it's SPX expected move. We share it with you. It's $1,800 more in indicators and scans. Number 4, TheoTrade live portfolio. This is the live portfolio. I just ran you through the portfolio. So it's a new premium selling portfolio. The whole portfolio is based on ultimate premium selling. It's a no holds barred trading approach. You can see everything we do. It's full disclosure on all trades, opening, closing. You get to watch me trade and discuss positions like never before. And I'm going to tell you right now, we even do a weekly video on this. We have the TheoTrade small portfolio. So we have a big boy for bigger accounts, and then we have the TheoTrade small portfolio. What I mean by small, $2,000 accounts and above. You can literally follow the trades verbatim, okay, if you so choose. That's up to you, right? So here's the ultimate TheoTrade portfolio. It just shows you every single trade we do, okay, pound for pound. You get to see what we do, period. Opening and closing positions. Then we do a weekly update video. The TheoTrade weekly update includes TheoTrade and TheoTrade small. Okay. What this basically does, it gives you 12 minutes. It'll update you on every move that I made in 12 minutes. Okay. On the week. None of the positions are like high frequency. You don't have to get in and out, in and out. I sell stuff and then I do nothing for 30 days. And then I sell some more stuff and then I do nothing. Okay. In 12 minutes each Friday. Okay, that's every Friday. We update you in 12 minutes. Seriously, you guys will love the TheoTrade portfolio. It's been a huge hit. Technical analysis toolkit. Technical analysis is predominantly Jeff Bierman, but not limited to Jeff Bierman. We have our kind of in-house market technician. Jeff Bierman built most of the Thinkorswim charts. He's not just a professor of finance, yada, yada. He built most of the Thinkorswim charts. This guy knows technical analysis better than anybody. Okay, at any of the brokerage houses out there. Tech 101, Tech 201, MACD indicators, time-based trading systems, pattern recognition, 21 other technical analysis classes. We give you bonus number 6, day trading treasure chest. This is actually Tony Rago, okay, along with Corey Rosenblum. day trading ES blueprint, consistent intraday strategies and setups, high probability intraday trading system. Okay, guys are going to love it. Again, we have everything covered for every genre of trade. Bonus number 7, mindset mastery. Timeout. Write this down. This is a class that, in terms of classes, like putting weight into a class is not enough. Each and every one of you, I don't care how good you are in this business, how long you've been in this business, write this down. 5 essential building blocks to successful trading. It's actually done by Steve Miller. That is the only class, okay? I'm gonna tell you right now, we originally sold that class for $1,000 a pop. We're like, we can't give this class away. It's just ridiculous. After a couple months, we're like, just forget it. Everybody needs to see this class, the best, okay? It's the best of the best when it comes to mindset, okay? You could go out and you could spend 20,000 bucks, seriously, on a trading psychology like workshop. This will blow it away. Okay, Steve Miller, I've known the guy since I'm a little kid. I grew up around traders. You're going to love what he does. This guy's been through more than anybody can ever imagine when it comes to trading. But seriously, write that down, watch that class. That bonus alone is worth it, okay? Meaning worth everything here at TheoTrade. Bonus number 8, it's a quick start guide to Ultima trades. The quick start guide just gets you up and selling premium. It's kind of like when you open up a new piece of technology, there's like a quick start guide. How do I make this printer work? Okay, this is a quick start guide to Ultima trades. Okay. What our members are saying, this comes from Jeremiah. My first 4 trades following exactly the details in your Ultima class just closed out using GTC orders, okay, set right after getting into the trade. This paid for your class in less than a week. I'm very thankful I subscribed to your services. Keep up the good work. Thanks, Jeremiah. TheoTrade includes everything you're going to need to trade to invest. Classes, coaching, email access, live trading room with live trades, indicators and scans, mobile access, everything you're going to need to succeed. We literally built, TheoTrade is a Netflix for traders, every genre of trade, everything imaginable. We're $297 for 3 months. That's not a membership. It's just one-time fee. That is not an introductory. Everybody always asks this too, okay? How often do I have to pay that? Okay, I want to make this very, very clear, right? It's $297 for 3 months. After 3 months, if you want to do it again, it's $297 for 3 months. We do not do a membership anymore. A lot of people didn't like it, like gym memberships, you can never get out, right? I want to make sure that everybody understands what it includes. Go right now to theotrade.com/skew. It's S as in Sam, K as in kick, E as in echo, W. Theotrade.com/skew. You can enroll for it. So everybody understands. It includes everything and every bonus I just discussed. The Ultimate Income Generator course, check. Access to 100 classes. It's over 100 classes, 6 years of classes. New monthly classes includes Blake Young's class right here, the Candlestick Trend Trading System. The live trading chat room, we broadcast a minimum of 6 hours a day. We give you real-time trade ideas, right? Indicators and scans, text and push notification on trade ideas, 5 separate trading portfolios, daily coaching sessions, right? This is continued education, and instructors directly answer your trading questions via email. You imagine, okay, over the next 3 months, if you sent us one email in the next 3 months, you think it's not worth $300? Okay. You just, justify it any way you need to, but we put this out there, and that's why we have 6,000 individuals on here. There's 6,000 people on TheoTrade. Okay. Next, we actually say we make it a completely riskless trade. And I want to remind everybody of this. There's a 90-day money-back guarantee. If you're not satisfied in the next 90 days, email support@theotrade.com, receive a full refund. There are no stipulations, right? There's no stipulations. There are none. There's no excuses. There's no questions. There's no commentary needed. Listen, it's $300. Okay. It's $300. If you don't love us, just ask for your money back. Okay. I would rather you have the $300 back, okay, than have somebody that's not loving what they're seeing, because we really pack a lot in. By the way, if you get your money back, you receive bonus number 1, which is the quick start guide. Okay, not the quick start guide. Let me show you. Bonus number 1, if you receive your money back, okay, is the start here menu. We give you every one of these classes, okay? You get to keep them forever. You get to keep these forever, right? So all of these are included, right? Even if you get your money back, you refund, that's fine. You get to keep the options 101, options 201, options 301, and you can attend the Candlestick Trend Trading System class. even if you got your money back, you still attended the class and still attended it live. It's coming up Thursday, right? As long as you're part of TheoTrade, you attend the class live. Get into TheoTrade now. We're going to work with you directly. We provide a little incentive today. We give 30 spots on the TheoTrade riskless deal. That means the first 30 individuals to enroll today, okay, get the money back guarantee. And we do that, people, listen, we do that to obviously incentivize you to enroll, but we also think you should because there's a class coming up, of course, on Thursday. But again, we give you unlimited email mentoring, right? You can send us your trades, bounce ideas off of us. The $297 riskless offer has never been available before with Ultima, okay? It has Ultima, the candlestick trend trading system, and there's a no stipulations money back guarantee. And that's important. Like, again, there's no if, and, or, but about it. It's $297. If you don't love us, please do ask for your money back. Again, we would rather have people that want to be here than people that are like, upset. If you listen to anybody here at TheoTrade, we'll actually have people they'll go on vacation and so forth, put their membership on hold. That's all part of it. You're allowed to do that. There's no problem whatsoever. Life sometimes gets in the way. People pay $297, do 3 months of TheoTrade, trade on their own for 2 or 3 months, come back for $297. That's why I say there's no membership. That's what's cool about it. Again, what our members are saying, close my year-to-date profit from Ultimate Trades is paid for my yearly subscription, right? So just wanted to show you everything you get today. In fact, here, I'll even hop over here real quick. So the Ultimate Income Generator class, there are 30 riskless spots left, right? We give you, obviously, the TheoTrade portfolio and, okay, the class is coming up this Thursday, the Candlestick Trend Trading System with Blake Young. Exact date and time over here. As I said, when you click add to cart, I want to make sure everybody understands this. As you're filling out your billing information, please, okay, put a phone number in here. The reason I always reiterate that, the phone number enrolls you for the text messaging. Not everybody needs, this is the text messaging. We do push notification as well. If you're out of the United States, okay, and you can't get a text message if you're like over in Singapore, because I know somebody mentioned they're in Singapore. We actually have push notification through our mobile, application. But if you're here in the US, we can actually do text messaging. So by all means, put in your phone number. We don't send a tremendous number of texts, but we do want you to automatically enroll for that. And again, you get to decide it's $297 or 2 payments of $149 or 3 payments of $100. That's up to you. It's totally up to you. And again, all of them include money back guarantee. We just give the first 30 people that money back guarantee to incentivize you, obviously, to enroll for this. Everything that's yours today. Again, go to theotrade.com/skew. Ultimate Income Generator, the quick start guide, right? 100 trading classes, the live chat room, okay, and email support. TheoTrade Live portfolio. We give you the technical analysis toolkit, the day trading treasure chest, the mindset mastery, quick start, okay, to ultimate trades. By the way, that mindset mastery, I can't stress that enough. For $300, you go watch that Slim Miller class. You're going to just be like for life. You're going to love what we do here at TheoTrade. Again, go to theotrade.com/skew. For those of you that were looking for the auto expected move indicator, it's actually found at the bottom of this page. I'll reiterate this again so everybody can see it. For the auto expected move indicator, again, this is the add to cart area, but cruise down to the bottom of this page. It's right down here, auto expected move indicator, okay? But let me throw up the link again because there's a few questions on it. Again, it's theotrade.com/skew. And I am going to make sure that everybody's good in here. So all right. With that, by the way, as you guys are enrolling, I'll read off just a first name and the your first name. I'll read off where you guys are from and your first initial of your last name. And again, I'm going to make sure I'm just posting the link in there again for the Ultimate Income Generator course. All right. With that, I'm going to butcher the first name in here. There's a couple of people that have enrolled. It takes me about 4 to 5 minutes before I can actually see you enroll. So Anrag G from California, Dorothy C from California, Richard D from Texas. This Zari B from California, and Scott P from Georgia. It's just the first 5 names that I've actually seen come through, and there's a bunch more that are actually popping in over here. I think I can see them off of my mobile device, maybe a little bit better. But I'm going to answer some generalized questions and then answer some specific questions in here. So hang with me for a moment if you want some questions answered. Okay, those of you that are enrolling, fantastic. And again, I'll gladly continue to read off the names. And the reason I'm reading off the names, first of all, obviously to thank you, but number 2, to let you know that you've enrolled in the first 30 people to enroll for the riskless deal here at TheoTrade. What our members are saying. This one comes from Jeff. It says, Don, I wanted to drop you a quick email. And it says, I think the class is wonderful. I've been stretched each session, not beyond my capability. After each session, I watch the recording and do the homework. I feel each week my knowledge of options is growing steadily and rapidly. Obviously, I can't speak for my classmates, but it's going very well for me. Thanks for the great instruction. Comes from Jeff. This one comes from Todd Summerall. And I love this particular email because people say, can I really email you and get that definitive kind of answer? And when I say definitive answer, I think a lot of people shy away from emails about specific trades. We don't shy away from that. We pretty much go head on into it. And that this email from Todd says, don't know if you remember me. I emailed you a few weeks ago and you told me my delta was positive a couple thou or more. You told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you for your information. Before Theo, I had no clue about portfolio delta. Okay. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. Basically, Todd emailed me and said, this is my portfolio. What do you think? And I said, you don't get out of this, you're done. You're done. And, he had to get out of a portion of it and saved his entire life savings. So, and that's why I don't mind taking positions like that kind of head on. Your questions kind of answered some general questions. I'm going to run through these quick, and then I'm going to get through some specific questions. And again, I've gotten here all of your specific questions typed in. So I'm going to get to those. But what do you need to get started? Again, it's theotrade.com/skew. What do you need to get started? Laptop, internet connection. Okay, laptop, internet connection. You don't even have to have that. I will argue, by the way, this is, people always ask, which iPad should I buy? This is a 200, I think I paid $70. It was on sale last year. I always buy the cheapest iPad possible. And then after about a year, I hand it to, I have 3 young children. So here you go. After about a year, I'm about due for a new iPad. I buy the cheapest iPads possible. Okay. I actually trade a huge amount, and I actually, do a lot of stuff for TheoTrade specifically off the iPad. I think it's fantastic. So you don't have to have an iPad. You can have an Android. I know some people they're Google people. There's Google people and there's Apple people. This is an Apple household. Anyway, we have everything you're going to need to get started here. You don't even have to have just an internet connection, right? And some type of mobile device. Number 2, this is not a membership. We don't auto renew. $297 is a one-time thing. And we literally send you an email. After 3 months, do you want to do it again? You go, yes or no. That's it. Okay, if you want to do it again, it's $297, right? Number 3, we now provide a TheoTrade weekly update so you can follow all the moves we make. Everybody loves the idea of selling premium, but not everybody tunes in. You kind of think to yourself, you're paying $300. Do I have to use everything on the site? There's a lot on our site. But my take on this, and again, put all the content on the site. My take on this is, I think you'd rather be overwhelmed than underwhelmed. The first time, can you imagine the first time you got on Netflix? If you got on Netflix for the first time today, you'd just be like, oh my gosh, where do I even start? Well, I'll tell you where to start. Start here menu. But there's a tremendous amount on the site. You don't have to use all of it. You gotta pick and choose. It's $300 for 3 months. It's not going to kill you. And again, if you don't love it, get your money back. We're going to provide you access, though, to the TheoTrade weekly update. So if you just want to sell premium and kind of kick back and in 12 minutes get updated, we do that. We provide archives for everything. Every word spoken on TheoTrade since 2016 is now archived. We get that not everybody can watch every live trading session, so we archive it. And then we provide you access to mobile. So if you can't sit in front of a computer or whatever, you can get on your mobile device, literally on your phone here, and you can get on your mobile device and actually listen and download, any of the archives over there. It's fair game. So, the cool thing on mobile device too, you can actually speed it up and you can listen to me 2 times the speed over there. It's kind of nice. All right. Add your cell phone number when enrolling, and you're going to receive trade ideas via text message and download the mobile application. So again, we do text out trades. I want you guys to know this. We don't text out like a ton of trades. What happens is this. We usually try to average 2 to 3 trades a week. I actually sent a text message today. But typically what happens, to be honest, we might be quiet for like 5 or 6 days, and then we go text, 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 text. It's, you're a function of the market. It's just, it really is a function of the marketplace. So don't get frustrated if you don't hear from us for 4 or 5 days, and then we text you like 2 or 3 times, in a given day or two. But again, we put out those trades. By the way, I'm going to read off a couple more names, and I'm going to finish this over here and then answer some specific questions. Curtis L. from California, Jeffrey B. from New York, Thomas T. from South Carolina, Eugene G. from Washington, Andres from Switzerland. Hopefully I didn't butcher your name. Doran B. from Canada, Jim B. from California. By the way, if you're in Switzerland or, for instance, Canada, you can always email us. We'll give you a couple of ideas for brokerage firms. It just depends on where you are. The brokerage firms obviously can vary over there. All right. You can email us. Number 7 here. I wanted to reiterate this. You can email us anytime, receive a response within 24 hours. All right. You're going to gain access to everything we've done in the previous 5 years. By the way, that's 6 years as of December. Everything in 6 years. Classes, coaching, live trading, every word spoken on TheoTrade in the last 6 years now archived. Variations, all the trades that we place can be done in an IRA retirement account. You can do this with as little as $2,000. We also can help you get approved to trade options, okay, at several major brokerage firms. People have a tough time with the brokerage firms. We don't. We have a great standing relationship. We have friends that run Charles Schwab, TD Ameritrade. We have friends that run E-Trade. We have friends that run Robinhood. And now we have friends that, of course, run Tastyworks. So you name a brokerage firm, and we've pretty much got friends over there. Remember, there's 30 riskless trade spots. Get results, take action, enroll for TheoTrade now. As I said, I'm going to answer a couple of generalized questions in here, and then I'm going to get to some specific questions. I'm going to pop this back up. And again, it's theotrade.com/skew. And just know you can also, you can always get a hold of me after today, right? So after you enroll, don't ever think that this is the last time you're going to talk. I broadcast live every morning at the opening bell. That's my time frame. So if you're like, oh, I kind of want to hear what Don has to say, I'm live tomorrow, 9:30 Eastern time to 10:30. I'm live every day for an hour. Okay, I don't really take days off. By the way, for the first time in like ever, I'm going on vacation next week. I'm leaving St. Croix in the Virgin Islands, and I'm going to a strange place, Asheville, North Carolina. If you're in the Asheville area, wave. Okay, so I'm going to go freeze up there for a couple of days, and then I'm going back to Arizona. By the way, Arizona is another house. I'm not going there on vacation, but I figured I'd go check out a new place. We're going to the mountains. Anyway, that's about as vacation, but I'm still broadcasting from North Carolina. People go, does that mean you're going to be out next week? No, of course not. Next week, okay, there's still a full trading week. The only day that's off is actually Thursday. Friday is still a half a trading session. By the way, I just saw another enrollment come through, Kevin H. from Texas. So hopefully I got you there, Kevin. All right. Let me answer some of the questions that came up inside of the chat. All right. Somebody said, "Can you do I sell index options?" Yeah, index. I'm huge in index options. Although I like a lot of the ETFs for you better than the straight indices, like SPX. It's fine, but you got to be experienced in the SPX. It's a big boy portfolio. But yeah, I do. Okay. You know what Michael said, can you provide a formal definition of exactly what skew is? So a definition of what skew is, okay, in options, there's puts and there's calls. It's out of the money puts versus out of the money calls. It's the differential in implied volatility from the out of the money puts to the out of the money calls. So in effect, when you're asking what skew is, you're saying, what's the implied volatility of the puts versus the implied volatility of the calls? The answer is right now, massive. Okay, the actual skew is just ridiculous, and then what it's indicative of massive hedging. But skew okay, is not a one-way road. It doesn't always mean the puts are more expensive than the calls. If you actually look at a stock like Tesla, the calls are more expensive than the puts. The skew is what we call inverted. It's very, very cool stuff, right? The cost of hedging is absolutely negligible. Most of the hedges that we put on, okay, are going to be a fraction of a percent, all right, of what it basically is for selling premium. So there is a cost for hedges, all right? Okay. Oh, and somebody said, how clear cut are the exits? It's as clear cut as can be. You can actually use a good till canceled orders to exit all these positions. Oh, I like this. Hey, Sid Don, what is the level of subjectivity? If a person masters the basics and a person does the same, how close will their trades be to each other? I'm going to tell you something about when it comes to selling premium, what's the level of subjectivity? It actually has to do in a risk profile. When you're newer to this, when you are newer to selling premium, we have you take considerably less risk, because when things go awry, we want you to be very capable of handling whatever you have on. As you become more astute in terms of selling premium, we can actually amplify the size of the portfolio. We produce better returns. So experience does have its place in the sale of premium. More or less, it's because it's the handling of capital. You know, if you say I have a $20,000 account, I don't want you to allocate $20,000 to selling premium. You're going to allocate a minute portion of that. Got to get your feet wet first. Nobody comes in here. You know, it's the same thing as, like, I gave you the analogy of a pilot a little bit earlier. You know, you don't go out there for the first day. You're like, that's it. I'm ready. I'm going to fly a 737. I think that's probably a little bit of big. That's some heavy equipment for your for the first flight. You're gonna go out there in the single engine Cessna, okay, and get your feet under you before you step into a 737. That's the same thing as like trading the Spiders versus the SPX. Hopefully that that makes sense. By the way, John T from New Jersey, Arnie Y from Louisiana. By the way, as the names are coming through, as I said, it takes about 4 or 5 minutes, and I will I kind of read them off here. So I got a couple of them. All right, onward and upward over here. I got most of the questions. Okay. Oh, I like this one too. This is a great question. Will Ultima help me being a more consistent trader? Take 1, 2 steps forward, 2 steps back. That's exactly what we try to avoid. In fact, what I just mentioned about kind of stepping you up through the ranks is exactly to avoid that. Listen, this business of selling premium, okay, we not only are going to sell premium, but selling premium breeds sometimes a false sense of confidence, okay? And this is one of the reasons we use these preemptive hedges, is to actually keep you and your head in the game and make you rationalize that there's always the risk of the market making a big move, okay? Sooner or later, we take a loss, but the loss should be minimal versus the profitability that we've seen over time. And that's one of the most critical things when I talk about edge. Is it's great. You can make a dollar, make a dollar, make a dollar, make a dollar, make a dollar. But what happens when you lose 10 and you go, oh, I don't want to lose 10. Okay. Well, make a dollar, 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 and only lose, for instance, 3. And that's why we use risk mitigation tactics to produce a little bit of edge over there. All right. Anyway, I love covering that one over there. All right, I think we got most of them here. Oh, I like this one too. The last one I'm going to grab. I'm new to options. How can I get caught up to speed? So it doesn't sound like a foreign language. You know what? The options 101 is how you get up to speed. The options 101, the options 201, the whole start here menu, and that's found literally right on TheoTrade. The start here menu is how you get up to speed in there. So no problem over there. Anyway, Timothy said, the hedges scare me. I don't know what to do. Okay. When to use the hedge, when to open it. Is it just me? Listen, that's what we're here for. That's why I use, and it's why I created the TheoTheta and the TheoTheta small portfolio. Is, it's not just, oh, here's a portfolio or here's a class and you're off on your own. Okay. We're walking you through these trades. So you get to see like when I'm hedging, when I'm not hedging, okay, all of it. And as I said, it's no holds barred. There's going to be times where we literally say like, all right, well, we can get away right now with a very minimal hedge because we have nominal risk on. There's other times we're like, hedge on because you've got heavier amounts of risk, and you'll be able to follow those portfolios literally verbatim. So Derek W. from Texas, Ravi R. from New York. With that, try to get every single question I possibly could. I want to thank everybody for tuning in. As I said, I apologize if you didn't read off your name as you're enrolling right now. Go to theotrade.com/skew. I think we have a handful of spots open on the 30 riskless spots. I want to thank each and every one of you for attending today. If you ever need to get a hold of me after today, just put Don in the subject and go support at theotrade.com. We're here to answer your questions anytime. Thanks everybody for tuning in today. Have a wonderful afternoon. Bye-bye.